Wake up, check the spreads, check the charts, then check my phone. 10 bands hit my broker, made a flip while home alone. You still saving up for shares? That's a broke boy strategy. I'm out here buying blocks, turning runners into salary. You hedge too much, that's why your gains look anorexic. I let my nuts swing, whole account looking reckless. You reading analyst notes, boy, that's fucking sad. Why? I just follow one line, straight up to the bag. You holding for a breakout, I'm sniping every wick. You setting stop losses, I just let it hit. You still trading based on news, man, you lost as hell. I just follow price action, got this game on spell. Get that money, run it up, stack it high, flip it twice. Ain't no patience, I need profits, fuck a long-term price. They candle look like dollars, every trade a fucking win. If I lose, I double down, make it back and laugh again. Get that money, print that paper, turn my trades to golden rings. Texas Roadhouse with the profits, throw my way to 20 things. I don't chase no weak momentum, I just chase these fucking checks. Run it. You still trading scared, get your broke ass off my set. Get out. Made a rack this morning, now I'm posted up at Roadhouse. Ordered every steak, told the waiter bring the whole cow. Butter on my bread like how my pockets keep inflate round. You eating off the value menu, boy, you ain't relating. Bro, let me tell you about a trade, put 50 on a straddle. Market gapped it open, sent my balance to Seattle. You playing penny stocks, man, that's cute, that's real adorable. I just shorted Tesla, turned a fanboy to a corpse fool. You in Discord asking what's the next big move. Clueless. I'm already out, y'all still stuck on what to do. My chart look like fireworks, every bar is lit. Your trades look like my dinner, Texas Roadhouse shit. I'm printing, my fingers got ink. Your account in the red while I'm flooding the sink. You cry about a loss, I just double my bet. You hedge like a bitch, I go all in, no sweat. Get that money, run it up, stack it high, flip it twice. Ain't no patience, I need profits, fuck a long-term price. Every candle look like dollars, every trade a fucking win. If I lose, I double down, make it back and laugh again.
Oh, brother, oh, brother, oh, brother. Welcome back to another episode of the Matt Core Show, where we are alive. Now, that particular statement's not going to really make much sense to you if you're watching on Rumble right now, because you're going to be like, Matt, you've never had issues on Rumble. What are you talking about? And you're right. I've never had issues on Rumble because for whatever reason, Rumble is better. On YouTube, I was sitting there on Friday, after locking in all those tendies that you guys saw, having a good old time in the Discord, thinking about what I was going to do for this weekend, really thinking about what degenerate NFL bets I was going to be throwing on, still thinking about how Penn State embarrassed me. And I look over at my one monitor that keeps up my YouTube page, and it just aired out. A little bit of a just, nope, we're not here. They have this monkey with like a little, I don't know, he's looking at something. I don't even know what the monkey's doing. And I was like, oh, that's weird. Reloaded it. And then it became apparent after the second reload and calling my producer that the channel was gone. Fortunately, it lasted about a day and a half, and we're back. Obviously, you guys are watching now from the normal channel, so that's good. A little bit of a stressful day, so just want to let you know, we seem to be back. I think there might be a little bit of issues with some previous videos as YouTube is working on restoring everything, but obviously very happy. A heightened moment of anxiety and stress for sure, but we're back. We're back to do it. They can't get rid of the Matt Core Show because we're just the best trader on this side of the Mississippi, folks. That's how we do it. That is exactly how we do it. You know what else is doing it? The market. On Friday, when we were paying attention to the new jobs report, the unemployment report, it was too good. The market vomited. And now it looks like we are setting up for a second attempt at this whole vomit, because right now in pre-market trading, if you look at the SPY, if you look at the Qs, if you look at the small cap sector, everything is gapping down below the low on Friday. On top of that, we see volatility picking up. We see crypto going the wrong way, and then a lot of our favorite equities, really barring one. There's one equity right now I want to talk about that's actually doing pretty well, but most of the equities, especially the Mag 7, are not looking so bueno this morning. Not looking so bueno, which is actually a lot of opportunity. I know when things are red, everyone kind of freaks out like bloodbath, oh, blah, 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 Armageddon. Really, especially as a retail trader, there was some fancy publication that did a big study on this. It's actually most people in terms of rapid wealth generation, as in really just crushing trades and really growing your account. That actually happens more so in bear markets than in bull markets. So I know that there's going to be a lot of like doomsday, a lot of naysaying, a lot of just like kind of scared, because most people are bullish. Most people either want to invest in equities, they want to buy calls or go long on the futures market, buy some crypto. And we're not really, I guess, it's not like a 50-50 split. It's more of like a 95-5 split between longs and shorts within the market. But I do want to clarify that this, it's red, it's going down, but it's a huge money-making opportunity if you're on the right side. So hopefully we can get ourselves on the right side today. So obviously throughout the show today, we're going to be doing some live trading as soon as the market opens in terms of day trades. Obviously, I might sell some premium, do some option stuff. I've been swinging some options. I actually have way too much of my account already input, so I'm particularly excited for the market open today, so I could show you guys that. We have some news related to individual equities, the overall market, and then also just some political drama. And I also want to kind of give you a recap of where we are in terms of the community, the Mac Course community, because obviously on the heels of what happened over the weekend, the producer and I kind of came up with a game plan over this weekend of the best way to move forward, the most protective way for us to move forward so we don't randomly just get murked, because this is now my fourth time in the world of YouTube where I've lost my channel for one reason or another. To be fair, the other three times, the first three times, I was considered to be harmful and dangerous. They like put me in the same category as literal terrorism. This last time around had something to do with more with a compromised Gmail. So a little bit of a different story. This last time around, truly not YouTube's fault. As much as I have issues with them, I gotta be honest. And this was a lot more of poor password management hacking type of a scenario, and they did assist me getting it back. So to be fair, this time around, it wasn't like they accused me of something I didn't do. So I just want to kind of be honest and let you guys know about the whole story. So obviously, we're setting up for a bloodbath of a Monday. And if you're on the right side of this trade, it's going to be a very, very green day in your account. So obviously, here's to hoping that you crush it on Friday. Here's to hoping that you're on the right side of the trade today. And here's looking forward to an absolutely crazy week ahead, because it's not just today. The rest of the week, there's a ton going on. So really in this morning prep show, I want to be kind of calling out everything you need to know about this upcoming week. So I hope that sounds good to everyone. With that being said, let's get rocking. So the SPY in pre-market trading is down 0.75%. The Qs are down 1.1%, and the Russell is gapping down 1.12%. You can see volatility is up almost 10%. We closed out last week at 1950. We're at 2150. That's not so good. If we see the VIX taking out 22, that means the market's getting pretty bad. If we see the VIX taking out 24, that means holy crap, you gotta hold on, Batman, because we're going on a ride. Obviously, in pre-market trading, things are looking pretty brutal on the 30 and the 4 hour. Things are looking pretty brutal on the 30 minute and the 4 hour. We are coming up to longer term support. Obviously, where the SPY is currently scheduled to open, if we were to open right now, we're right at this downside gap fill from Tuesday, November 5th, which a couple days ago seemed like a pipe dream of a profit target. But literally, we are actually gapping down below this, meaning that if anything, we actually have an upside gap fill now, which is kind of interesting. Very rare that you have such a long-standing downside gap, and then by the time you get there, you end up gapping below it. actually turning this downside gap fill truly into an upside gap fill up to 578.55. Now, obviously, if SPX doesn't quickly recapture 5,800 out of the gate, I don't think we're going to get this gap fill today, but obviously more on that when the market actually opens. If you take a look at the Qs, we are gapping down below this important support from late November, opening up a potential shot of 496. And I do want to bring your attention to the fact there is another farther downside gap fill at 492.88. I know that that's a bit far away, but I also want to clarify, if today gets bad, if we start to snap some key levels in the overall market indices, yes, there's a real shot of getting this downside gap fill today. Not the highest shot, but something to pay attention to. I wouldn't say that this is my base case. I think there's going to be key support before then, but who knows? If people keep selling calls and buying puts, and we are in negative gamma as we go down, it's going to end up becoming a self-fulfilling prophecy. And as we go down and down and down, the market makers are going to be forced to hedge by most likely selling in the futures market, pushing it down more and more and more. And then just to round this out for the three major indices we pay attention to, if you look at the IWM, that's the ETF for the Russell 2000, there's a downside gap fill to 212.78, and we're currently trading at 214.39. So that one's in play today. It does look like we're going to be gapping down right below this key support here in mid-October, Thursday, October 10th. So you're getting the major message of the morning that the SPY, the Qs, and the Russell are all looking pretty brutal. If you want to know why this is all happening, it's both on Rumble and also on YouTube. I did a breakdown video that came out yesterday. This is bad, and it's more detailed breakdown of the jobs report number we got Friday morning, an hour before the market opened. It was so good that the TLDR there is going to be that we're not going to get a rate cut. If we don't get rate cuts and yields continue higher and higher and higher, that makes money itself more expensive. When money's more expensive, that means it's very tough for personal or even business loans. It's like more expensive to take that loan. So if there's less money in the system, you're going to have less business growth. And then obviously as that permeates throughout the economy, you're going to start to get pretty weak earnings numbers. And that's why the market goes down when money becomes more expensive. That's a very quick TLDR. If you want a more extensive breakdown, once again, on both Rumble and YouTube, check out the video, why the stock market crash is going to get. And I think the next word is worse. Yeah, January 12th. So that was a pretty timely update. And obviously, based on when that was filmed and posted, it looks like it's very rapidly coming to fruition. So we have a lot to chit chat about. Stock futures slide is key. Tech stocks get hit. NASDAQ futures drop more than 1%. Before we get into it, yes, you get the fact that the stock market's on fire. Unfortunately, the U.S. is still on fire. Los Angeles wildfire death toll surges to 24 as firefighters brace for more fierce winds. Unfortunately, this week, the anticipation for meteorologists is that winds are going to get worse, which will probably extend the fire. It is a very, very heartbreaking situation. Los Angeles fires rage as high winds set to return this week. There's some very side point here. There's some crazy videos of just the water getting dumped. I enjoy those because some of these, I mean, you have to have balls of steel to have this job. So hats off to them. But overall, like, yes, there's cool little things like that. But then when you take a step back and realize what's going on, the fact that we're even seeing this, it's crazy. It really is. I'm starting to hear some conspiracy theories that this wasn't a random thing of climate change or anything like that. They're starting to find some videos that at least some of these fires were intentionally started, like arsonist type of a thing, or maybe just campers not paying attention, but potentially just like whether in malicious or unintentional, there are some, like I said, conspiracies. Who knows? Seems like a lot of conspiracies recently have been coming true, actually started by a human rather than just errant, unfortunate circumstances. So I'm sure there's going to be more on that to come. Governor Gavin Newsom slams Trump's disinformation about California wildfires. I don't know if you guys were invested into this particular storyline as much as I was over the weekend, but Gavin Newsom, I very much believe this might be the start of the end for him. The way he is handling this, to him, is just like a photo op. When he does talk, he's choosing to say the dumbest things. I have always been, confused, concerned about why he is continually reelected, and yet California keeps picking him. I suppose it's because there just hasn't been a better candidate, which that blows my mind that there hasn't been a better candidate to beat him, but I don't know who likes him. I really don't. I think he's only in the position of power he's in just because he's running on the Democratic ticket. And if you're in California, the blues always win, when in reality, he's been a horrible leader. There is objectively, he has been a piss poor leader. And I think now that he's kind of on the world stage, at least on the national stage with this whole debacle, I think more and more people realize that he's just absolute trash. So I think it's a matter of time, but I think he's just going to end up being done here. Just how he's choosing to manage this. I mean, over the weekend, it was kind of crazy. If you scroll back far enough, you're going to realize he was complaining to Biden. He was complaining about Musk. He was tweeting things out and he was getting fact checked and it was looking embarrassing. And now if you go to his Twitter page, what I find interesting is he intentionally puts things out there that are vague, and a lot of the times it's just not the full story. And right here, you can start to just do grok questions on the things that he's putting out there, but he's basically continually complaining about the misinformation that's out there. And it's not misinformation. What's going on is his fault. It's kind of like the Spider-Man meme the meme of like pointing in the mirror of like, who's at fault here? It's him. It's 100% him. The amount of taxpayer dollars that went into the system in California to stop exactly this from happening. And yet now everyone's like, okay, where's all that money? You took the money from us. Why hasn't it been used to expand the fireman force, to fill up the pipes, the reservoirs with water so the fire hydrants have it? There's more and more legitimate questions being asked. And I pray for Los Angeles, for California to get over this current hurdle, but I also am a little bit hopeful, a little bit of a silver lining that the catastrophe that's currently going on causes the voters in the local area to take a step back and be like, okay, we need some answers. We need better people at the helm of this ship to get us into the right direction, because it's not that difficult to see that California has been clearly heading in the wrong direction for many, many years now. I think this is the perfect opportunity for them to look at the weak players in their political system, which is many of them. I'm not going to say all of them, but it is many of them, especially in the large urban areas of LA and also San Francisco, and just clean up. Absolutely clean up. Did someone just say, I like Gav? You like Gavin Newsom? Dark Knight. Congratulations on having the dumbest comment potentially not only of the day, probably of the week, and maybe of even the entire year at this point. You like Gavin Newsom. You are actually stupid. That is the dumbest thing you could possibly say. You're just saying it to say it, and you actually know no objective measure of this situation. He has caused people to lose, the state to lose billions of dollars of value with this fire. He's pissing away taxpayer dollars. All of his stupid DEI initiatives have ruined the state. We're seeing California, unfortunately, it's a beautiful state. It has some of the best weather, has very interesting, very creative, artistic communities, and we're seeing it just being run into the ground. It's sad. It is truly sad. California is by far one of the most interesting places of the entire continental United States. And to see it fail with all those millions and millions of people who are citizens of our country, just to see it driven off a cliff, it's beyond sad. Anyway, bringing it to another sad thing, once again, coming back to the market, which is looking pretty rough right now. We're not taking our foot off the gas this particular week. Tomorrow morning, an hour before the market opens, we get the producer price index, a measure of inflation. Wednesday, an hour before the market opens, we get the consumer price index. On Thursday, an hour before the market opens, we get retail sales. And then on Friday, heading into kind of a longer weekend, the market's going to be closed Saturday, Sunday, and Monday. Monday, in observation of Martin Luther King Jr. Day. But anyway, on Friday, we get another inflation report, but this time out of the Eurozone. So this week, we have major reports. Tuesday, Wednesday, Thursday. This is all on the heels of the jobs number that we got on Friday, and the number was too good. And remember, when I say the number is too good, it means that the Fed doesn't really have much of a reason to be cutting the interest rate. Right now, the current Fed fund rate, which has a huge impact on the 2-year yield and also trickle down impacts on the 3, the 5, the 7, the 10, and it gets less and less the further duration you go out. But anyway, the current Fed fund rate is at 4.25%. Remember, the Fed fund rate is one of the major tools that the Federal Reserve has to fight inflation. When inflation is high, they jack up the Fed fund rate. They make money more expensive because if money becomes more expensive, they dampen demand. If you dampen demand, that is one crude tool to fight inflation. And it's the major tool that the Fed has. From June of 22 up until September of 24, inflation was slowly but surely trending down, and there was one period that we went sideways. But anyway, we bottomed out in September. From September up until now, unfortunately, inflation has been coming back up on top of the recent FOMC meeting where we got the SEP, the Summary of Economic Projections, and they basically said, hey, actually, we think inflation's going to kind of keep going up a little bit, not an extreme amount, but going up a little bit. As soon as the Fed said that, and also brought up the fact that they thought the labor market was as soft as it was since 2019, people said, oh, they're not going to cut rates because they're still battling inflation. And you have to think about this. They might be a little bit more willing to keep cutting rates if they're showing very bad, like weak economic signs. But when inflation is going up and you're getting strong, bullish, green economic signs, such as a very good jobs number, that means that the Fed absolutely has no reason to cut rates right now because remember, they're still trying to fight inflation. So when we got that good number on Friday with respect to the strength of the economy, that shot our odds up to about 97% chance that there's no Fed cut in January, late January, January 29th. Now, this particular week, we have a PPI report, a CPI report, and a retail sales report. If inflation is indeed higher and we keep trending in that wrong direction, we end up like this is trending in a way where we might not get any Fed cuts. And if things do get extreme, and this is kind of like an outlier case, but it's worthwhile to discuss anyway, if inflation keeps going up, like continuously over month, we actually might get another Fed rate hike. So it might go the other way. And then obviously you're seeing how the market is enjoying this news right now. Not so good. This is what happens when money becomes more expensive. Investors hope earnings season can revive faltering stock rally. So yes, you have 2 inflation reports, retail sales, you have an upcoming holiday, you have inauguration, you have a giant OPEX this Friday. There's a lot going down and there's more here. It's the fact that earnings season is now officially underway. Gets going kind of with the airlines last week, but really it's with these major financial plays. So I believe Lululemon already reported this morning. They ended up beating. I believe Moderna already took a pretty big hit, and we're going to touch on both of those in a second. But really gets rocking this Wednesday. JP Morgan, Citi, BlackRock, Wells Fargo, Goldman Sachs. A lot of financial players get us going before the market opens this Wednesday. This Thursday, TSMC, important in the world of AI, data centers, and crypto, really think all the semiconductors. United Health Group, the largest health insurance play. Bank of America, Morgan Stanley, PNC, a lot more banks. Really, earnings season gets rocking with these big financial players. So they might beat and offer us a little bit of a relief rally. It would be technically, it would be a Vanna rally, but that might be prompted off good earnings. But on the flip side, we're trending down. And if these numbers are not so bueno, if inflation is coming in hotter than anticipated, we're going to keep going with this trend of lower highs and lower lows clearly ever since really, it all started on the last FOMC meeting. The dagger in the heart day was Wednesday, December 18th, when Jerome Powell said, we expect inflation to go higher. We think the job market is a little bit soft. The labor market is a little bit soft, and we might not be doing as many Fed cuts as we anticipated. When all of that was communicated, you can see on Wednesday we dumped, and then this is just kind of like the recoil impact of that announcement. We're still getting these lower highs, we're still getting lower lows, and we're now setting up to gap down. So I do want to clarify, in the short term, I think it's always important to put timeframes on these types of things. in the very short term, like today, I'm expecting bearishness. I would not be surprised, though, if we see a situation kind of like this, where there's a little bit of a relief bounce, a little bit of like a dead cat bounce that leads then to the larger drop off. I'm expecting weakness to kind of persist into February, March, and then from there, I'm looking for some of the like footing to really be found. I'm expecting this bearishness maybe in total to last about somewhere between 1 and 3 months. It's kind of tough when you're doing those medium-term callouts, but I'm not looking for like a straight sell-off. If that happens, I'm not going to complain because I'm positioned for it, but I'm also mentally prepared to cut my current bearish positions if I see a little bit of a reversal. And not to bore any of you, but from a technical perspective, as I referred to before, there is a decent chance of setting up for what's referred to as a Vanna rally, and that's just a phenomena that we could experience through the options market. So don't be surprised if there's kind of another push up to, I don't know, whether the trend line, the EMA, something like that. Remember, when we go down, it's not necessarily just a straight ride down and down and down. So just be prepped up for that. I don't want anyone thinking like, no, he said he was bearish 100% of the time. No, understand like time frames do matter here. But anyway, on top of all the inflation reports and retail sales and the craziness with the Fed and inauguration and OPEX and all that, yes, we are in earnings season. U.S. tightens its grip on AI chip flows across the globe. Just when you thought it couldn't get worse, Biden does something stupid that makes it get worse. Nvidia is currently down 4% in pre-market trading. And if you look at the semiconductor industry, down 2.4%. And this is what happens when things are already looking pretty weak. And then Biden says, you know what? Let's put even more downward pressure on the semiconductor industry. Just in, Apple iPhone sales dropped 5% in the holiday quarter. That's not so bueno. Apple's board recommends shareholders vote against proposal to eliminate diversity programs. In the immediate future, I don't know if this would necessarily have an impact, whether bullish or bearish on a company. I just brought it up because we see a slew of companies now saying, hey, we're nixing the whole DEI program. Apple is actually one of the few companies saying, no, actually, we're going to keep it. So just a little bit of a deviation from the current trend. So I just wanted to bring that to your attention. Even though this has been a bad news bears type of show thus far today, I do have some good news. Breaking. Rumble. Rumble announces cloud agreement with the government of El Salvador. El Salvador stands for freedom, innovation, and prosperity, and we are always looking at new frontiers. Like El Salvador, Rumble has also embraced and defended these ideals. Folks, there is an important reason, as shown from the fact that I lost my YouTube channel over the weekend. There's an important reason why I'm also on Rumble. Not only do I personally align with their core morals of, hey, free speech is pretty important, but I just like their growth. I like it both. Right now, it is a company trending in the right direction. I don't see Google or YouTube stopping really all the heinous things that they've been pulling off with a lot of different content creators, while Rumble is consistently and constantly not only growing and doing cool things like this, making it a more interesting investment opportunity, making its cloud that much more prolific, but just from a moral standpoint, I like the fact that they're there defending free speech. So as everything is bloody red this morning, there's a reason why RUM is currently up 4.6% in pre-market trading, and that's the exact news right there. I want to clarify, yes, not only am I a content creator on Rumble, but I'm an investor in it. I do not actively trade it. Whenever we're talking about these things, you guys see me day trade, you guys see me swing trade, and once in a while we talk about longer term investments. Yes, I am in Rumble. I have thousands of shares of Rumble. I am not an active trader of Rumble. I'm in it right now. I'm very much in the green. I love what's going on, and I just want to be in it for the coming 5, 10, 20, 30 years type of a deal. This is an investment for me because I do believe right now, based on the current trajectory of what's happening with the company, that it's going to continue to rise and rise and rise, and year after year just be more a serious player in the social media space. And obviously, from a dollar standpoint, I wouldn't mind if it keeps growing in cloud, because cloud per year is a multi-billion dollar business. So if it can get a nice slice of that particular pie, obviously I would be a big fan. Moderna stock plunges 18% after company lowers 2025 sales forecast by $1 billion. What's $1 billion amongst friends? So Moderna obviously had the heyday during the Rona crisis, and now since then it's just been getting absolutely schmacked. Bill Ackman's Pershing Square offers to take over real estate developer Howard Hughes for $85 a share. This jumped out to me just because of the timing of what's going on in LA. Obviously, we know that there's about $60 billion plus worth of property damage. LA's going to be rebuilt. I don't think that people are just going to be like, you know what, the whole LA experiment's over. I think it's going to take time. And I do believe that anything related to construction and home building, all the secondary and tertiary businesses and suppliers, everything that's going to be needed. If you want to go as far upstream as copper being needed in the houses, okay, I think that's going to be a big thing, all the way down to the actual builders themselves. I think right now it's very sad what's happening in LA, but in terms of this, it just kind of jumped out to me that in all of this craziness is when we get the announcement. And I don't think this is a thing that Bill Ackman's like, okay, I'm going to be doing it now because of LA. Obviously, these types of deals take quite a while, so I'm sure it's been on the back burner for months, maybe if not years. So pay attention to Howard Hughes, pay attention to Bill Ackman, and I think it's just very timely, and I think it's worthwhile to bring to all of your attention. Now, on Friday, January 10th, I ended up having a pretty crazy trading day. If you were paying attention during the stream, you know, with respect to my 0DT options, that I wasn't trading anything. And then I decided to kind of do something stupid. And then it kind of ended up being smart. And then it ended up being kind of dumb. I don't know. It was weird. But basically, early in the morning, you heard me say, nope, we're too far away from the calls that I want to sell. So whatever. In this bounce, I was like, maybe I could get interested in it. So I did end up selling some. And then unfortunately from 12:10 to 2 p.m., it was going against me. And it was very much going against me to the point that some of my out of the money calls went in the money, which when you're selling premium is not what you want to happen. Fortunately, right here at 2, it started to break back in my favor. And that's when I started hammering it more. So here's the full breakdown. Piper, the trading system, at 11:01 fired off a bearish 4 out of 5 confidence, which is basically a 2x multiple, a SPY call credit spread, and a Q call credit spread. Obviously, it returned 16, 14 for a total of 30, and the capital requirement you would have needed in your account was 370. Obviously, you could scale that up to your heart's desire. I ended up taking 2 trades. This was my first one that I even put in here. Like I called it a degen trade. And yes, I'm happy it made me $1,400, but it was a boredom trade. I probably shouldn't have been in it to begin with. And then I was forced into this trade, which once again, this one was a nice profitable trade, $2,850. And I was forced to do this because it was basically a way to help the risk of my first one. So I got myself into a position that I'm not the most proud of. And I know that's weird because I ended up making $4.2 thousand, which I'm super stoked about. But really, sometimes you get a lucky trade and it's not really a quality decision. And I don't think this second one was a quality decision and it was forced upon me, but I don't know if I should have really been trading Friday at all. Like I said, I kind of got into it out of boredom and whatever. But if you want these trades in real time, obviously your whole first month is free in the Goonie Trading Discord. You have to sign up via Locals, and once you're a supporter on Locals, you will have access to the Discord. Like I said, your first entire month is free. Just put in that promo code Goonie. It's pinned to the top of chat. It's in the description of the video. Obviously, if you like these trades yourself, it would have paid for more than 7 years of the entire service. I'm putting my money where my mouth is because between all the private lectures, my trades, Piper, Salad Bar, all the other community members, I think there's way more value than what's going on here. And like I said, I'm showing you my actual trades. This is from one day alone. It would have paid for 7 entire years of the service. So give it a try. No harm, no foul. If you're in there for a month and it's not for you, just make sure to cancel your account and you're never going to be charged anything anyway. So I'm letting everyone kind of test drive it because I don't want anyone to feel like they're like financially on the hook. Now, if you don't really want the paid thing, there's still a lot of freebies, such as the newsletter. Obviously, I break down the previous week. I call out all the major earnings. I highlight the ones that I think you're going to enjoy the most. All the major macroeconomic events. So for example, the PPI, the CPI, retail sales. Tomorrow, we have some Fed speakers. We had the Fed page book. So this is like just a kind of a quick one-stop shop of the major things you might need to know for the upcoming week. I also give you the seasonality for each individual day. For today, Monday, January 13th, the bulls have won this day over the past 25 years, 72% of the time, with a bullish profit factor of 1.62. Here's a look at the hypothetical equity curve you would have if you bought at open and sold at close on the S&P 500 futures market, obviously trending up and up and up. I have a feeling that trend's going to be a little bit reverted today because right now in pre-market trading, things are looking pretty brutal. So it seems to be bucking the trend. Now, if you go later this week, you're going to notice tomorrow a little bit more neutral, on Wednesday a bit more bearish, on Thursday a bit more bearish, and then on Friday a bit more bullish. But the thing I want to bring to your attention is this week that we're about to enter into, and I could show you this with the exact data. I think this is very important for everyone to know. This week that we are going into right here, you can see that it's blue. Let me zoom in just so you guys can see this a bit more. This is the seasonality of the S&P 500. The week we are currently in, starting today, I need everyone to listen to this. This is the fourth most bearish week of the entire year. Of the entire year, there are only seasonally 3 more bearish weeks, as in the whole week, I'm not talking about individual days, than this particular week. Obviously, it gets really bad at week 10, pretty bad at week 16, and pretty bad at week 38. But this is the fourth most bearish week of the entire year. So if you're a person who trades off seasonality, this is very, very important for you to know. Just want to obviously bring that to your attention. And for me personally, especially when the market opens, obviously I like to take seasonality into account with the overall trend of the current market. And that's exactly why I get myself into these types of positions if this ever loads. But everyone in the Discord knows, yes, I do 0DT options trading, I do futures trading, and I also do swing trading. That's exactly how I get into bangers like this, where I'm up 202%, up $14.5 thousand early this morning. Not a bad deal whatsoever. And when this loads up, right now the market open is like a little bit crazy, so we're gonna see. But with that being said,
dingity ding. Ooh, whoa, brother.
Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. Remember, folks, it's just money. You're not going to take it with you when you go anyway. All right, here is my game plan. As many of you know, I'm already in up $21,000 to get the day started. Not a bad day to be Mateo. Folks, like I said, this stuff, ask anyone in the Discord. This is all posted in real time when I get into and out of these positions. 14K, 13K, 7K, and then break even. Crushing it. Absolutely dominating it. You could do the math at home, but $22,000 divided by 600, which is the yearly fee for the Discord, I'm pretty sure you're going to be in there for the rest of your life. So if your question is going into the Discord worth it, yes, it is very evidently worth it. And you don't have to take my word for it. You could take the real-time trading proof for it and also ask the other people in the Discord. I very, very much believe that with what we teach and how we approach the market, I can assist you on the journey for this Discord paying for itself. I think that's the major measurement of all of this is, okay, if you buy a service, do you gain more value or insights than the cost of it? And I would say that this is a very evident yes right in front of your face. But like I said, that is my opinion. All right, let's see how this is going. I'm trying to not do anything right out of the gate. I do want to see how things are trending. I'm going to do my best to sit on my hands for the first 10, 20, 30 minutes, just because I know things are absolutely crazy. I mean, take a look at spot cam here. How wild is this? I want to show you. If we go back a week ago, hang on, do I have to reload this page really quick? I want to show you how elevated the vol is right now. So let's go to the 6th. Look at this. So this is the current state of vol. And then just a week ago, look at how much lower it was. So right here, even the market is saying we're ready for craziness. The market's already been on tilt. 2 inflation reports, retail sales, upcoming holiday, new president is being inaugurated, massive OPEX this Friday. There's so much going on. Look at this elevation. From last week, this is where the volatility was at. This is on the term structure, and this is implied volatility on the left side. Bringing it to this week, look at how dramatic this has changed. The implied vol has gone from about 11.7% all the way up to 32%. So it has tripled. Absolutely tripped. That's crazy. So just want to give you more of a mathematical measure of, no, we're not just seeing the market go down, which how are we early this morning? Okay, a little choppy in the SPY, a little downward in the Qs. We're seeing it in the underbelly also of just the market and options. There's a lot going on there. Obviously, we're going to be checking out the option flow throughout the day. I do want to bring to your attention a couple key levels out of the gate. In fact, I don't even need this, but we're seeing a large put credit spread at 5,770, spread by 5,750. This is rare. I'm not really sure why this player decided to spread it by 20 points, but they did nonetheless. Of course, there is some sort of statistical chance that this could be a naked put being sold, and then these could be unrelated calls. I just highly doubt it. So I just wanted to bring that, and I already marked out all the key levels for us today. Let me get the 1 minute chart. So, okay, if we can recover above 5,800, this is the signal that the bulls in the short term have regained a bit of control, and then we'd be kind of setting up for an upside gap fill, maybe a little bit of a dead cat bounce, but that's a slight return to safety, and that's where I would expect vol to kind of die, and then that's where we might start to see a bit of a Vanna rally, and then we kind of have to watch it for a day or two or three or five to see if we start to turn back over. That starts at 5,800. 5,790 was kind of some short-term targets. I'm not really too worried about that right now. Let me clean this up a little bit more. These are the three levels on the screen right now, 4 levels that I think we should pay attention to. So the top level is where the bulls gain some control. We're looking for the upside gap fill, and then maybe a little bit of a Vanna rally, a little bit of a dead cat bounce, that type of a thing. Currently trading at 5,783. Now, 5,770, that's a key one because that is exactly where this player, if it is a put credit spread, which is a neutral to bullish position, that's where this player starts to get tested. Remember, when you are selling puts, you want it above the sold leg. The sold leg is 5,770. As in this player, if it is a put credit spread, or even if it's a naked put, it doesn't matter. They want it above this value. So if this starts to crack, because these are sold puts. Remember, these are sold puts. So when you create a position by selling puts, you get out by buying them back. When you buy them back, that's going to drop the delta, which puts more bearishness in the overall structure. So that's why this would be my first watch out of the gate to the downside. And then from there, obviously, we either see some long puts or a protective leg all the way down at 5,750. I'm grabbing that from right here, 5,750. And then just from the craziness that we've seen in the market, and I can bring this to your attention right here, we see a big spike. Where are we at? There's a big spike down here at 5,720. This is the volume from the overnight session to this morning. So a lot of people, for some reason, between the opening late last night all the way up until right now at this moment, 5,720, they're targeting that. That's the volume. And then if you want the open interest change, you can see there's a big open interest change at 5,750, some at 5,770. Once again, that could be the potential put credit spread that we're watching. And then down here, we see this 5,720. That's the next spike. So that's where I'm getting all those levels from. And right now, I can't tell you how we're going to react at those levels. All I can tell you is those are the levels to be watching to see if the sellers stop and the buyers step in and we bounce, or do the sellers get more aggressive and all of a sudden there's just no buyers and we start to crater through those levels. The point of these key levels is not to predict, do we bounce or break down? It's more saying, oh, these are key levels. Watch how the market reacts when you get there, because it could clearly have an influence on your actual position. So I wanted to lay these out. Once again, this is directly on the SPX. And let me get it back to this 1 minute right here. I have VIX up here. Let me know if it gets above 22, especially 24. That's what I'm like uniquely interested in. Tesla, I knew I should probably have gotten out of that early this morning. I'm very much considering dumping that. I'm also paying attention to coin because I know a lot of people right now are freaking out about Bitcoin. Bitcoin itself vomited below 90,000 for the first time in quite a while. Literally, that was a minute and a half ago. So you might want to be watching that. But I see the SPY taking a hit right now. I see the Qs taking a hit right now. This is pretty brutal out of the gate. I have not done any trades yet today. Like I said, I'm trying to keep myself disciplined. One of the biggest issues I ran into last week was trading way too early. So I'm trying to kind of get the pendulum to go completely the other way today, specifically, just to keep myself a little bit more accountable here. Coin, how are my positions looking? Currently up 20K, not a bad deal. Man, Tesla's screwing me. So Tesla's actually showing some strength right now, most likely because of the new Model Y announcement from last week. The market's really enjoying that. And I also didn't get myself enough time. Well, anyway, as we're waiting for the opening session to really play itself out, we're only 8 minutes into the day. Very quickly, Let me switch this over. I do want to give a shout out to Public. Today, Public is the stream partner. This is by far, in my humble opinion, the best brokerage to be trading on. If you are trading options, especially options, because this is the only brokerage to give you a rebate. If you are an option trader or an aspiring option trader and you are not on Public, I have a very serious question for you of what in the world are you doing? There are no commission fees. There are no per contract fees. It is the only one that will pay you a rebate every single time you buy and sell a call, every single time you buy and sell a put. There is no other brokerage giving you a rebate. That's why it's absolutely option. Beyond that, they have equity trading. They do not engage in payment for order flow. They have bond trading, some of the best UI, UX for that. A lot of these brokerages don't even allow you to trade bonds. And of course, they also have crypto trading. Shout out to Public. There's a reason why we've been partnered up with them for over a year. It's because they are the best retail brokerage in the business. Check it out every single week, every single month. They are slowly but surely improving. If you look at the strides that they've made over the past year, it's absolutely phenomenal. And I have a strong suspicion that they are not going to be slowing down anytime soon. And with that, if you use the link pinned to the top of chat in the description of the video, if my mods could make sure that that is being posted, like I said, pinned to the top in the description of the video, you check it out. Free to download, no commission fees, no per contract fees. If you're an options trader, especially if you're an options trader or an aspiring options trader, why would you not trade on a place where you're also getting a rebate? It would not make sense to be on their brokerage, which is exactly why I am actively trading with them in real time, showing you in my account. I'm putting my money where my mouth is, and there's a good reason, because no matter where you are in your options trading career, you're better off on Public. If you're nice and green and profitable, you'll be more because of the rebates. If you're not exactly where you want to be, it won't be as bad because once again, you are getting the rebates. This is the day. If you haven't signed up, if you haven't downloaded, check it out. Like I said, pinned to the top of chat in the description of the video. Use that link and you're actually going to start off at a little bit of a higher tier of those rebates. There's certain tranches to it. And if you want to get a nice leg up, make sure you are using that link. And with that being said, the market is still looking like garbage. Actually, where was that? Here, I'm getting it actively pinned right now. Okay, yeah, it is. You guys should be able to see it on the top of your chat box. If you're looking to get Public right now, which I highly, highly recommend. In fact, it is not just my favorite brokerage. It is my favorite brokerage by a long shot. It is pinned to the top of chat in the description of the video. SPY, try to pop a little bit there, got faded. I'm looking for Tesla and Coin to get faded. Also wouldn't mind for this. Okay, yeah, we're cooking. We are cooking. We are cooking. Let me switch this up full capture. All right, we are good over here. We are good over here. You can see that the market is a little bit suspect, a little bit questionable. 5770 is my first level. I'm going to set an alert there just so we know if we tag it or not. This is a key level. And if you don't think it's a key level, well, I guess read the options chain a little bit better. The 5 minute, the 10 minute, the 30 minute, and the 4 hour are all bearish. The 5 minute, the 10 minute, the 30 minute, and the 4 hour are all bearish. As you can see right now in the lower right of your screen, the NASDAQ, the NQ is taking out a major support, and there's another major upcoming support at 20,640. I'll be watching that. And then if you look at ES, we are right on top of a major support at 5809, and then the next one below that is at 5784. Obviously, watching both of those key levels. So this is like more of a medium term duration support level, which also, just on a completely unrelated note, happens to be aligning with some of these shorter term support levels. So all we can do is watch there. I wouldn't be aggressively going short at those levels because you don't know if they're going to break or hold. All I can tell you is if you're riding something down and you're like, okay, I need to get out like now, those might be an interesting level for you to target for sure. Or if you have a little bit more patience or time to wait, maybe in your expiration, you can see if they do break. But I think at this point, the odds are pretty high of us testing this level. Of course, no one has a crystal ball. You can't guarantee anything because it would be overshooting really the intraday low that we got right at market open. I guess we could check the options. The options flow is not looking good. Let me bring up both the index and also the Mag 7. Sometimes there is a deviation, especially this early in the week. But what we're seeing right now is no, there is no deviation. This is just getting absolutely destroyed. I see prices bouncing a little bit and there's some flow coming in. If I have to guess, it's probably puts being monetized. It's a little bit of puts being monetized, but it's more so people are starting to buy some calls, which means that if the market starts to turn again, these people are going to be instantly destroyed. So be careful on chasing this one, especially because we're only 13 minutes into the day. So be careful. I see that there's a pump coming in, but please understand that the options market is not agreeing with the size of this move. I would say that it's currently agreeing with the direction of the move. We started to bounce at 942, but this bounce right here, the options are not chasing it that hard. So this might be a bit of a fake out. Some puts got closed. We have some calls coming in, but the size of this move, the options market did not agree with that. And I think that's very, very important to note. Look at options barely bounced while price went up. That might be the classic fake out. So just be careful. Don't be surprised. I mean, if anything, you should be prepared for larger swings today. But I cannot stress this enough that if you look at the options flow on both the S&P 500 and also on the Mag 7, the bears are still in control. I would be very, very careful. Obviously, I can't guarantee anything. I don't know where the next bar is going to go. All I can tell you right now is the price action bullishness is currently in a mismatch with the not really that bullish options market. 5 to 10 minutes from now, maybe the options market catches back up, or maybe in 5 to 10 minutes to now, this entire price pop gets completely faded. Something obviously to consider. And you know what? I might put my money where my mouth is. If this drops enough, I might show you guys a little bit of live trading on the futures market. I'm getting ready. I'm waiting for my moment to pounce. Wait.
Order filled.
Just went short. I'm short at 51.75 on NQ. Obviously, I have well-defined risk. All right, we're in it. Heart rate's high. Let's see how this bad mamma jamma plays out, folks. Did I get... All right. Oh, I just need to mark out my max profit in case there's a vomit, but of course I might get out before
Order
that.
submitted.
So if the market turns before we get all the way down here, of course I'm taking my profit and leaving. I just wanted to do a quick calculation of what my max profit would be. But as you guys can see, I am short. I'm short. I just took a short position. I have well-defined risk. I like it for two different reasons. First of all, I'm trading with the trend. The 5-minute, 10-minute, 30-minute, 4-hour, 5-minute, 10-minute, 30-minute, 4-hour are all bearish. And as I alluded to before, there was a mismatch between price and options. Now, that all increases my odds, but you can never bet in the style that it's a sure thing because, of course, you just never know what the market's about to do. I see that there's a little bit of a bounce going on right now, but I'm just playing in a situation where I believe my odds are optimal. They're never guaranteed, which is why you always have to consider what your stop is just because it might be going against you. But I like the current setup and I believe that the odds are favoring me. But once again, just because odds favor you, it's not a guarantee, which is why, remember, your job as a trader is to be much more focused on the potential downside. If it goes against you, like downside for your portfolio, and be like, okay, like if I'm just wrong, where am I going to cut it? And obviously I know exactly where I'm going to cut it. Now I am hopeful it goes right. And I believe that the probabilities are stacked in my favor. But inherently, whenever you're in a trade, the fate of your trade inherently is decided by future traders, not people trading the futures market, people about to trade, because if they're more bearish, you go down. If they're more bullish, it goes up. So really, the die, I guess, the proverbial die are in the air. This trade is spinning and we're going to see. I am mentally prepared. I know that today's a bit more of a whippy day. So yes, I could be on the right side of it. Today could be a horribly bearish day and I still might get whipped out of this short position. That is that's the life of trading, team. That's absolutely the life of trading. So I'm going to slowly and surely monitor this and just see what in the world is going on. The major thing standing out to me is I find it very odd, this pump that we had at 943 to 944. I think it's going to get faded, but time will tell. Time will tell. I should also note that maybe not everything's going in my favor, because if you bring your attention to the SPY and you look on the daily, there is an upside gap fill to 57855, and on the Qs there's an upside gap fill to, what is this level? 50392. Whenever you gap down, as in you open up below the previous day low, there are very good odds of that gap getting filled in that next trading session. Once again, not a guarantee, but it's an aspect of bullishness I suppose I want to call out to you, because that's one thing currently going against my real-time position. So just want to bring your attention to that there is an upside gap fill. Okay, I see the Russell going up. I see coin going up. Not the biggest fan of that. I'd feel way more comfortable if the Qs go below 555 and if the SPY goes below 576.11. But obviously, if in the very, very short term, we see continued strength, like just this grind to the upside, I'll just cut my position and wait for a re-entry. No harm, no foul. That's one of the beautiful things about trading on the futures market is there's no pattern day trading. So if you want to be very, very conservative with your trades and you're like, nope, I just want to be out, I don't want to risk any money, you have all the power to do that. All the power to do that. But what I'm trying to get a better understanding on right now was I'm happy I waited for this pump because I thought there was going to be a bit of a whip. I think this is all going to get smashed. Obviously, that's what I'm trading for it to happen. And I just keep coming back to the options market that, SPX actually caught some flow there. That's interesting. See how there's a giant mismatch right now between the Mag 7, Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. See how the colored bars, which is the measure of the delta, one for Friday and one for all expiration, those have been going down, down, down. Yet if you look at the S&P 500 index, which is SPX and SPY and XSP and ES, that's actually been trending up since 942. So once again, we're seeing another mismatch in the system, which when there's a mismatch, it's very difficult to tell who's going to be the winner. Like, are the options mismatched or is the price mismatched? I'm betting that the price is mismatched just because of already the current trend. And I think there's quite a bit of fear in the system. But once again, that's the risk you take. You're never going to get a riskless trade in the market. So if anything, it's your job to manage the risk as you see fit. And ideally, you act accordingly, which, speaking of acting accordingly, I might have to be cutting here soon. I don't know. I still like this, and I still think today is going to be a bearish day. I think I might have, I don't know. It depends what way this breaks. If this obviously breaks to the upside, I was a bit early, but that's fine. That's trading. That's life. That's how this works, team. That's how this works. So I'll just be playing accordingly, trying to trade systematically, trying to take my emotion out of all decisions and just play. Do I want to cut right here? Do I want to cut? Do I want to cut? Do I want to cut? Trying to be as mechanical as I can be. Mag 7 picked up a little bit ever since, what is this bottom right here at 942, basically coming into 943, 13 minutes into the day, there was a clear change in the S&P 500 options flow. It went from bearish, 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 and then right there, price kind of let it up, but there was this like weird flat period that ended up catching a bullish tailwind at 948. I still think it's not enough to convince me that we're actually bullish. There's various things going through my mind right now. One of the major things is we have not recaptured 5,800. Without recapturing 5,800, we're still very much in the danger zone. We haven't tested 5,770. I don't see the market being that nice to not test this player. There's someone that sold a lot of puts at 5,770. From my experience in the market, it is not a nice player. Generally, when there's big positions like that, it seems like the market has a proclivity to testing those players. So we haven't recaptured a potential bullish level. We haven't tested this mega I guess, gamma level that I find of importance. Am I biased? Of course I'm biased, because you guys saw my positions. You know that I'm biased because I have bearish positions. So I might just be talking myself into holding this, but we'll see how it plays out. Double down if you like it. Nope, that's not necessarily good risk management. Just because you like something doesn't mean you just keep betting more and more and more. Generally, and I know this goes against a lot of ways people end up trading, but they've done some pretty cool studies on this whole subject. And generally, it's actually better off to add to your winning trades and really just, when you have a losing trade, just cut it and move on with your life. While I find a lot in the retail space, people end up adding to their losing trades to improve their average. And then if they have a winning trade, they just kind of almost take their profit too early. So successful money managers, like I said, they kind of do the exact opposite. They're adding to their winners. Like as something is up, they add to it, add to it, add to it. And then when they have a loser, instead of trying to improve their average, they literally just like cut the position. So I really want to see this up. This is not the spike. I probably should have bailed a little bit earlier than this. NQ is at 20,800. I was kind of watching that level, 20,800. And we are slightly above that right now. I was watching right here because it was roughly these EMAs. The 5-minute was slightly below it. The 10-minute was slightly above it. So right where my cursor is, I was kind of waiting to see how NQ reacted to this. Now right here, if it gets faded, coming back to this previous conversation of being worthwhile to add, if this gets faded, I might be slapping on another contract. This is kind of an interesting psychological test. That I know futures traders like. It's just, well, it's human. Like you just like to watch these values. So patience. We can only trade what the market gives us. Okay, there's no sense in really marking out the intraday high because we're effectively at the intraday high. Please don't forget that we have those upside gap fills. Let me open up another chart just so you can see them a little bit more easily. Upside gap fill. Right there, 578.55. And then on the Qs, it is, I thought I marked it out. Did I not? Why is nothing loading here? It's basically 504. Why is this not marked out? It is 503.92. All right, so we might be going up for these upside gap fills that, once again, that roughly aligns with this level that we've been talking about quite a bit this morning, 5,800. I'm wondering if the market can actually recapture this right here. Let's see. We're at it right now. We just tagged 5,800. Big technical level, big psychological level, important level in the options market. I'm wondering how the market's going to react here. Once again, when we lay out these key levels, the point of this is not to predict like what's happening there. It's more of saying this is an important level. You got to pay attention and see, okay, do you keep going or do you get smacked? Or it's just a key level that should be on your mind. And we're kind of at that right now. All right, so something changed at 9:43, and we saw that dramatically take off in the options market. Right here was we got a negative reaction after a flow alert, and then boom, just leading into 9:53 is when the options market completely changed trend. Price picked up first and then options followed. And now we're actually seeing it get dumped at, surprise, 5,800. I know price isn't reacting that much, but look at options. Right here, you have people already monetizing. Right here, they monetize. Look at this. All the 0 DTE call buying is already getting dumped. Puts were being closed. So if you see people start to buy puts again, so obviously this is adding negative delta to the system by people selling their calls, but they're also selling puts. So it kind of equals out. If people continue to sell calls and then start buying puts, as in if the blue lines start tilting down, that's a lot of negative delta. Look for price to very quickly follow. Right now, no one's actually really touching puts. They monetize their calls. Starting at 9:57, people monetized their calls. They rode it up, made a lot of money, and dropped it. Basically, they played this upside gap fill. You can't be surprised by that. That's a very, very classic play. They said, okay, somewhere in here, they thought this was a good target, and it is a good target. I don't blame them at all. That's a good play. 100% that's a good play. And then you could see that they decided to lock in their money starting at 957 right here. The green candles are the 0 DTE calls. So if that's going up, that's people buying 0 DTE calls. And if it's going down, that's people selling them. Now they could be selling them to monetize. They could be selling them to be putting on a little bit of a neutral to kind of bearish position. But regardless, there was strong buying from 946 up to 957. So 11 minutes of 0 DTE call bullishness. And then right away it just got dumped. Right away it just got dumped. So what does that mean? Okay, now that we can clarify what's happening right here, what does that mean? That means you should not be a buyer at this level. First of all, on an intraday basis, you're already chasing. Fuck. Hang on. I think I might have to trade. Yeah. All right.
Order
so
filled.
Thomas, coming back to you. Now that I waited for that, I'm basically betting that this was in fact smacked at 5,800. Once again, it's a risk. I don't know the next bar. I just know if it goes up, I don't have to risk that much more. But yet if I'm right and it comes down, I was able to improve my average by quite a bit. So I don't know the next bar. Anyone pretending that they know the next bar is just completely full of it. All I could tell you is that I just threw on an additional position that I believe is in line with the current data set. But if I'm wrong, and you always have to ask that first of okay, how bad is it if you're actually wrong? I'm taking on minimal risk. I was able to add to a position, and if I'm wrong on that, the second one's just a paper cut, but it obviously dramatically improved my current value. Which, speaking of that, yeah. So instead of being in at 51.75, I jumped it all the way up to 72. So if I want, I could just dump one of these at, maybe I will do that. That would actually be, what is this, 62? Yeah, I'm going to watch this a little bit more closely. Actually don't need that anymore.
Order canceled.
But we'll see. We'll see. Thank you for keeping me from blowing up my account. Hey, if I can help one person from blowing up an account, that's exactly what I'm here to do. So I want to clarify, I did add another one, and this just improved my average fill by about 20 points, which means that if there's a quick little dump here, I can cut one of my two and then no harm, no foul, because I'm just there at a higher value, once again, taking on less risk if I could get out. And that's a big capital if, because what I'm playing is basically this getting faded at 5,800, because I am seeing people now buying puts and they're still selling their calls on the S&P 500. And then if you guys want to look at the Mag 7, once again, they started to buy puts at 957, and then there was some calls being monetized at 958. Call monetization and put purchasing adds negative delta to the overall option structure, which is bearish for the underlying. So just to, I guess, tie some of these concepts together, but let's see how this is going. I'm almost back to break even. Almost back to break even. What do I want to do? Hang on. I need to do some quick math here. What is my quick math? All right, so the question in my mind right now is, do I think we could get all the way back down here where my cursor is at 35? All right, so that's
Order
the
submitted.
extent of where I can go today. I like to know the extreme values I could be dealing with, but obviously I'm really considering partially managing this earlier, as in if we dip maybe where my cursor here is at 60, dumping one of my two. So like I said, based on the current setup, this is the extreme of what I could be dealing with. This is the extreme. I'm just wondering if the market's going to try to punish all the people who went long right here. Maybe yes, maybe no, but I think that there might have been a chunk of people who got tricked into buying this right on the snap, and just basically they bought it at a premium. They paid too much, and I wonder if the market's about to make them pay. Time will tell. Time will tell. I'll tell you better when the market closes, I'll tell you better. All I could tell is in real time, puts got closed a little bit, but that's quickly getting faded back down. Let's go to the easier view just so we can get a quick, the delta's still getting faded a little bit. Let's go to the 30-second. Let's just keep cleaning this up so this is easier to see. Let's just keep cleaning this up. I should probably set some alerts. Probably should set some alerts over here. Let me get up to the 1 minute. Sometimes I just get in such a chatty Cathy mode. Sometimes I just get in too much of a chatty Cathy. Back above 800. Man, why are they doing this to me? I just keep watching NQ right here. I was kind of hoping that this snap of 800, we saw this recapture of the 800 back at 954. We pumped above, got a 40-point pump. I thought when it could not hold that right here, we bounce. There's a little bit reversion. But in here, we came down by 25, more than 25 points. I really thought that was an official snap. But as you can tell, wish in one hand and shit in the other, and see how that one plays out, because we were coming right back above it. This is a key level for me. Key level. Which way are we going to go? A little bit of a pop in options, tiny bit of a pop in options. Nothing to run home and tell mom about, but worthwhile to pay attention to. We're still below 5,800. I guess on SPX, if you're messing around with that, you might want to watch if we snap 5791.90. Once again, for just those short-term traders. Obviously, if you're more of wanting larger key levels, the intraday low at 5775 seems to be pretty important. A lot of support found there. And then we know in the options market, there's a large player currently positioned at 5770. Shit. This is not going the way I want it to. We got some options starting to breathe life into a potential recovery. Here comes our second test of 5,800. Our second test of 5,800. Let's see how options react in real time on the second test. Let's see. Look at that. Huge pop, little pullback, followed by another huge pop. That's for the Mag 7. Here's a look at the index itself. Not as bullish as I thought it would have looked. There's not that many aggressive buyers stepping in here right now. It's still, look at this. Ever since the sell-off at exactly 10, it kind of looks a little bit lethargic with respect to options. Obviously, I see price. I see that price is getting back up there. But thus far today, the tune of this has just been a giant mismatch. Between price and options, there's some wonkiness going on for sure, which I suppose could be fully anticipated just with all the craziness going on this week. I thought there would be a bit more fear in the system, but maybe so many people thought that's exactly why we are now popping. I thought there'd be a bit more fear in the system, but I don't really have the evidence for this. I just believe that maybe if everyone thinks the same thing, well, then that's the big group of people about to be screwed. So maybe because there was so much fear of a negative open, a gap down, that maybe if enough people thought that, they're like, nah, we're actually going to have a recovery. But speaking of this, the SPY did get the upside gap fill. The SPY just tagged that upside gap fill. That's a strong play. If you play that, my hat's off to you. That's from a stats standpoint. That is a strong play. We just hit the low value from Friday at 578.55, which means the watch is now for if 577 can hold, or is it going to get rejected right there? So we slightly overshot 5,800. Once again, that gave us that upside gap fill from the true gap. So on SPX, I'm watching 5792. On SPY, I'm watching 577. Those are roughly equivalent levels. Here, let me set this up. I want to see how far this pullback really is, or if there is a pullback for all I know. We're here just doing some guesswork. Coin is picking up. Not the biggest fan of that. Tesla's picking up too. Actually, since the game got a little bit changed today, starting at 9:43. Not only can you see it in price, which I mean that bar is pretty evident, but that's right here. That's when the options just started to pivot. Now even though we just see, this is why there's a little spidey sense going off in my head right now of like maybe buying this push is not worth it, because look at price went higher, options didn't. The options flow did not agree with this new high. Now, of course, it's not like it's a 1-for-1 perfect match. So maybe 5 minutes from now, the delta is really high. But based on the current set of information, we saw a price spike at 9:57 and then a new high at 11:07, 10 minutes later. But the delta did not follow. Options did not agree with this push to new high, which makes me think maybe players were just going for this upside gap fill. And if it does not hold 577 on the SPY, if the Qs don't hold 501.50, this might just recover. Oh, I should point out that the 5-minute and 10-minute are now bullish on both ES and NQ. Once again, that's another piece of information going against my current trades. If you're joining in right now, first of all, welcome. I'm currently down a lot of money. Oh, shout out JTH, gifted 5 different memberships. Shout out JTH, I appreciate that. That's so kind of you. I see people are calling out DJT. Oh, whoa. DJT is moving, and so is Rum. So the only 2 green things on my watch list are DJT and Rum. That's gnarly. Look at that. DJT is really moving up 8.8%. So kind of bucking this very red trend that we're seeing. I'm almost back to break even. I'm down about $20,000 right now. I'm down 1,000, but I have 20 accounts all with the same trade. That's where I'm getting the 20,000 from. But my major watch, like, first of all, serious warning, because the new high did not agree in options. And then same thing here. The Mag 7 went to a new high. Options slightly undershot it, and now they're starting to take a bit more of a hit. But there's a mismatch. And whenever you see data mismatches like that, it's something you got to pay attention to. All right. I have an alert here for a potential market structure shift. When I say a market structure shift, you can see from 942 to 943, or excuse me, 942 up until now, higher highs, higher lows. If you're looking, but now we just broke a low, so now we don't know. We don't know if the next high is going to be lower. If the next high is higher, that means you have an expanding microphone pattern, which is the worst pattern to trade. Or is this a market structure shift? We go from higher highs and higher lows to, if the next bounce is weak, then we have lower highs, lower lows. So that alert right there on the SPY, that's an important one, because it's a potential market structure shift on the 1-minute chart from bullish over the past 20-ish minutes, 15-ish minutes, to maybe it is now going bearish. I don't know. We're going to have to pay attention. On the Qs, a similar setup would be on the snap of 501.50, and we just got to wait and see how it plays out. Small cap is actually holding on a little bit better than I anticipated it to be. Here's the look at the real-time options flow. It's just going down right now on the SPY, and it's also going down on the Mag 7. Let me switch over to the 30-second just so we can put more data together. Team, shout out Mike Kimmel. Do you think DJT will operate like a leveraged government confidence tracker across the presidency? Nope, not at all. Government confidence? No, I think it's going to relate to things Trump does or doesn't do. Nothing to do with government confidence. If you want to know about government confidence, you're going to look at like yields, not DJT. At least that's my opinion. All right. Are we going to actually snap this? I'm almost back to break even on this. So I was down quite a bit, and now we're seeing where it can go. Now we're seeing where my position can go. 20 plus 50, 70, 70 divided by 13. Let's see. Let's see if I can get back into the green. Let's go to the 100 tick. Let's watch this thing in hyper speed. hyperspeed, or we could even just go to the 1 minute. We could go to the 15 second. What's the 1 minute look like? Ooh, that does not bring me joy. That is not what I want to be seeing right now. I thought I would see something that I liked a little bit better. Let's go back to my normal view. Remember, this isn't necessarily my profit target that I'm going to get out at. This is my max profit target. So let's say we dip down to 50 and it shows strong signs of basing there. I'll just get out there. I just like to have this marked up. So I guess I don't get that little like greedy, undisciplined thing of like, go farther. I like to get like my extremes kind of figured out beforehand. And then I like to manage it within those extremes. But we're just kind of going flat since 10-11, and obviously I'm hoping for a bit of a flush. I haven't been green until, am I about to go green? Nope, doesn't look like it. Doesn't look like it. I thought I was going to go green there for a second. The SPY is right at that potential market structure shift level, and the Qs also snapped there, so maybe we'll put up a little bit of a reversion alert, and then my next major alert is at 576, and then at the Qs it's at 550. Those ones, since they're lower, are probably more pivotal levels and more representative of a true change. I see the Russell is catching a bit of a bid. What's going on with the VIX? The VIX got smacked pretty hard for this 20-minute period. We're getting a bit of a recovery. If it starts to push 21, that could get a little crazy. 22 is where things actually heat up. And then 24 is where probably we're having a horrible bloodbath of a type of a day. Why is the 200 tick chart good? Oh, no. It's good per person. I personally like it. But there are people who use the weekly and daily chart. There's people who use the 1 second chart. I would say that the quality of a chart is based on more of like the person. It's just a tool. It's just another tool. If you're using it properly, it could be a good tool. For me, in my like day trading, kind of scalp trading, when I'm in these trades for about an hour, it just kind of gives me a quick little test of like, okay, which way are we trending? I like to kind of overlap it with like the quick reactions, I suppose, to options flow. So that's why I kind of go a little bit smaller, because like when I see a little bit of a pop, okay, like I want to know if it's reversing on a super small trade count, which is 200 ticks. So I use this for my active day trading. I'm not really using it for like my swing trades. If you use, maybe you want to go bigger, maybe you want to do like for your swing trades, you might want to use like the 20,000 tick or something like that. So there's no time frame, in my opinion, that's better or worse in a vacuum. It's better or worse based on what you're attempting to do. So right now, I would love to be out of this trade in this exact moment. I would love for the market to vomit there, but like, see, just in terms of tracking what's going on, okay, it told me something switched here at 10:07. And for a person who might be in the trade for 5 or 10 minutes, okay, I find this to be a bit appropriate. Now, to be honest, now that we're just talking about, 200 tick is very, very fast. I'm showing it a little bit just because on the stream here, there's I guess let's call it like you kind of want to see action. You want to see the short-term movement. So even for this, like 200 tick, I would say is kind of like even appropriate for like scalp traders. It's like kind of, I don't know, when we see the 200 or the 100, that's really, really, really fast. And once again, that doesn't make it good or bad. It just makes it, okay, like know what you're attempting to do with it. Type of a thing. So even right here, see how in the very short time frame, and when I say short, I'm on the 200 tick, maybe a little potential reversal. We see the indicator went from bullish to bearish to maybe bullish again. I would feel confident that if this snaps, which also happens to be the recent low, but if this snaps, if this little once again, it's bullish here. So that's kind of giving me an indication. I find that the smaller the tick, the smaller the time frame, it allows me to like fine tune some entries and some exits. But I would never say something is better or worse. I would just say like, what are you particularly like using it for? There's no such thing as a better or worse time frame. I mean, hell, there's some people who don't look at any charts whatsoever. There's long-term investors that they just do fundamental analysis and they look at the price and they don't care about technicals whatsoever. So like taking it to the next level of certain charts being good or bad, there's people who make a killing. And I'm saying billions of dollars yearly, and they don't look at the chart. They're just like, okay, this is where we think the fair value for it is. It's currently trading at X, which is there's some delta that we could capture. And that's what they do. They capture that difference. All right. So Obviously, I've been in the red for a lot of today. I got slightly into the green at 10.15 here. I probably should have pulled out one at 60. I guess I was being a bit greedy. I guess we were chit-chatting. I do feel like things are breaking my way, though. Like, I feel like this is a little short-term uptrend that if we can snap this and turn the indicator back bearish, that I think on the next attempt to go from right here, see how the indicator's red, bearish, bullish. If it switches back to being bearish, I think I'm going to get this flush all the way down and be able to lock in my $30,000. That's my max target is 30K. But we'll see. We'll see. I see options popped a little bit there. If I'm going to guess, it's probably puts being monetized. Yep, exactly. Puts monetized right there. So buyers did not come into this system. Bulls did not come into this system on the Mag 7. This was put people who were long puts. Most likely they were long puts. They were monetizing. They were hitting the cash register. So this isn't bullishness. This is a lack of bearishness. And then if you look at the S&P 500, once again, that was for the Mag 7, you're seeing the same thing. People are monetizing their puts, as in they're riding puts down. They're locking in their gains, but no one's actually buying calls. So even though you could argue that like positive delta, negative delta, it still has the same like delta notional impact. I think from a psychology standpoint, it's still very good to know, are you bouncing because bulls are coming into the system, or are you bouncing because bears are leaving the system? And I mean, if you want to get like super philosophical about it, yes, it has the exact same delta measurement impact for sure. But I think it tells you a little bit more about the current psychology of the market. If I saw bulls coming into the system right now, I'd be a bit more concerned about my position. But I just see bears hitting the cash register. They're taking their money and saying, okay, cool. And who knows? Maybe if enough bears leave the system, that might prompt bulls to come in, but I'm not seeing any call flow. The calls are the green and the orange one. No one's touching calls. In fact, the last time they touched calls was someone selling a bunch of calls at 10:15. So I see these puts coming up. People are monetizing their puts, and I'm just kind of waiting for this tranche of put monetization to end, and then I want to see what the next directional move truly is. So I have to withstand a little bit of pain. Obviously, surprise, surprise, right back up to this 5,800 level. That's a bit problematic for me because if they get above this and hold above it, I'm going to be sweating a little bit. But this is probably that reversionary bounce. Remember, so on the screen right now, you can see these green arrows and these red arrows. Those are the local highs and local lows. So starting at 942, we had higher highs and higher lows. That is the definition of a bullish trend. Obviously, you could apply that to whatever time frame you're on. This just so happens to be the 1 minute chart. Obviously, we're doing some scalping, some day trading and whatnot. So anyway, higher highs, higher lows. By definition, that is a bullish trend. And then all of a sudden, we snapped this low at whatever this low was right here. We snapped the low at 5792. We snapped that at basically 1012. So that makes you wonder and be like, okay, we did have higher highs, we did have higher lows, but now that you snapped the previous low, by definition, you can't have higher lows because as soon as you break it, you know you're going to have a lower low. So then that creates a big question of where is the next high? If the next high is lower, well, now all of a sudden we're potentially in a new trend of lower highs and lower lows. I'm saying that I want that to happen. That's what I'm currently betting on happening, but obviously I don't know. The other option is, you made this low. Well, what if you shoot all the way up and take out the previous high? Those, in my humble opinion, are the worst circumstances to trade. When you have a lower low and a higher high, you have an expanding, some people call it a microphone pattern. Really, you have price expansion. The bulls are getting more bullish. The bears are getting more bearish. I find those are by far the most difficult setups to trade, higher highs and lower lows. I hate that because you're not trending. So how do you know which way to play it? You don't know who's going to win out. Obviously, the other option is a lower high and a higher low, which is consolidation. And those are just a patience play. You just have to wait for it to break. But like I said, from 942 until 1007, the bulls were in control. We trended up, higher highs, higher lows, like by definition. We all are defining it the same way now. Clearly, you could agree that that was bullish. Then all of a sudden, we snapped this 5792. We made a fresh low. So that should make you say, okay, are we potentially switching direction? And that's what we're waiting for now. It does look like a lower low just got put in between 1001 and 1015. And now we have a lower high between 1007 and 1020. So with that, that is a lower high. That's a lower low. I would say that the bears are back in control on this particular time frame. When you do this analysis of market structure, higher highs, lower lows, like that type of stuff, obviously it's specific to the time frame you're on. What you're seeing on the 1 minute could be wildly different than what you're seeing on the daily or something like that. So it's always specific to that particular time frame. But as a person who is planning on getting out of this trade, ideally sooner rather than later, I care about the shortest time frame analysis. And really what I want is a snap of this low at 1015, because on a slight snap of this right here at 1015, 1016, there's probably going to be a puke all the way down to my max profit target. And then I'll be done with this, this particular trade on the day. And as I'm explaining all of this to you, let's go. Let's go. Come on, give me my money. Let's do it. Is the best trader on this side of the Mississippi going to strike again, folks? Let's see. What can I put together? What can I do? Give it to me. Give it to me. No. Give it to me. Give it to me. Come on. You can do it. You can do it. Come on. Come on, give it to me. Give it to me. Come on. No. Hey. Stop it. Shit. Hey. Not cool, brother. Not cool, brother. We talked about this. We talked about this. We talked about this. Come on, brother. Hey, come on. Yep. Hey, come on. Hey, come on, brother. Hey, Babo. Hey, Bobby. Hey, Bobby. Hey, come on. Hey. Come on now, you here? Come on now, you here? Come on now, you
Order
here?
filled.
Folks. What can I say? Fucking 30 grand locked in. I'm the best to ever do it. I feel so bad for all the haters who they want to see me lose. They want to see me fail. And day over day, I'm just disappointing. The biggest mess up in my entire career is that I don't give the haters a second to breathe. Day in and day out, lucky. Gary's calling me lucky. You know, Gary, maybe I am lucky. Maybe I am lucky that I was born with the fucking biggest brain known to man. Maybe I am lucky that my brain has the fucking density of a goddamn black hole. Maybe I am lucky that I am an straight, white, Christian, affluent, able-bodied, charismatic, devilly handsome dude. Maybe I did hit the genetic lottery to be fucking Brad Pitt's body double with the IQ of fucking Einstein. Maybe. I don't know if that's luck. I don't know. Maybe it is. Maybe. But I'm gonna, dude, if you are dealt pocket aces, why would I not play them? Back in 94, when yours truly entered the world, and I looked at my hand and I said, wow, I just got dealt pocket aces and everyone else is betting into me. And then I see that the flop is 2 more aces? Dude, maybe it is luck. Call it whatever you want, dude. But I'm here playing the game. If you have an issue with the game, hey, move on to a different one. Move on. Dude, I didn't make the rules here, dude. I just showed up to play. Sorry I'm fucking crushing. No, that was probably a little bit of luck. Dude, I love douchebag cores. Douchebag cores might be my favorite. All right, where are we at? Yeah, we're snapping some key levels. The crazy thing is, though, is you guys could have taken that trade. I showed it to you. It's not my fault if you didn't like it. Like, I'm doing this live. This isn't pre-recorded, team. I'm ripping it live, dude. It's not my fault if there's a bunch of other babies around here that just, I don't know. It's just not my fault. It's just not my fault. Not my fault. Yeah, this shit. DJT is looking good. VIX is picking up. Be careful there. How's the Russell looking? Russell's even starting to puke. Dude, for all of those of you who think, oh, Matt's just so lucky. Hey, I'm unlucky sometimes. At one point, I was up 22,000. Now I'm only up 17.5. That's sad. Like, I mean, I know this might sound like a whole woe is me thing, but to be fair, not that long ago, I was worth $4,000 more. So I'm pretty much there with you. I mean, I don't see anyone saying boo-hoo for Matt. I was up 22 grand. Now I'm up only 18. I basically lost $4,000. So like, hey, you know, the grass is always greener. You might be sitting there with your account completely blown up. You're like, oh, why'd I buy all those calls? Oh, why'd I get out of my puts? And understand that it just looks like the grass is greener on my side because I was also up $4,000 more. And then here we are. So like, you might want to walk a mile in someone else's shoes before you start like really saying something. That's just that's my only point is you might want to walk. I'm gonna start a GoFundMe. I'm definitely gonna go start a GoFundMe. Why trade 20 accounts at the same time? Don, the answer to that's super simple. It's because my nutsack is the size of the Grand Canyon. And before the doctors start coming in here and chirping me like, oh, actually, that's super medically concerning. First of all, I only talk to vets because I'm a goddamn ape. All right. So if you're coming at me with all your human doctor stuff of like, no, seriously, like that's actually bad to have nuts swollen that large. Don't talk to me unless you're a large animal vet. But that's why, Don. It's what, dude, because I have the fucking testosterone levels of a fucking moose in rut. I don't know. Cause I can, dude. A defund me, just like a money giveaway. Options. All right. Well, that's not something I wanted to see. What happened? Ooh, we're seeing a little bit of a switch up. People are now buying calls again and closing out their puts on the Mag 7. Yeah, a clear jump in the delta. Now, once again, the overall trend is still down, so I want to see how big this delta pop can get. It's a bit smaller on the index. So this might be a little bit of a reversion. If it starts to tilt over again, obviously the next natural target would just be the intraday low established at 942 before that first price and option spike. So yes, this price spike, we're seeing it in options, and it's the double doozy. It's puts being closed and calls being bought. But the question here is it going to last? Is it going to last? With respect to some of these option players. Oh, okay. So the 5770 player that we were talking about with all those short puts, they're gone, dude. This guy left. Uh-oh. Someone was a bit of a pussy. This player right here, the person who, for whatever reason, sold 5770 puts, like they were short those puts, adding gamma to the system, positive gamma as in support. That player is now gone on a 0 DT. That is big news. And actually, yeah, no, it was a put credit spread because they pulled the 50 as well. Oh, whoa. Whoa, Tonto, the game is changing today. Obviously, this is still an important level to the upside, but we got to find the new levels, team. There's been a big shift in options. Big shift in options. All right, so the first, well, actually 5770 is still important because of this. That's just from a delta pressure standpoint. That's the path of least resistance. So you can still watch 5770. It's not as important as it was when we started today. With respect to the open interest change, 5770, 5750, that player dumped 5750. And there's a lot of short volume at 5750. Wait, there's a lot of short volume at 5750. They were long and now they're, so that player got out. Okay. All right. I'm piecing this together in my mind of what the fuck happened. So this morning, it was about 6,000 contracts. There was a put credit spread, which is bullish to neutral, neutral to bullish. They sold the 5770 basically like 5 points below our intraday low. They were short that, and then they had a protection leg at 5750. That player is gone. Gone. And that player leaving actually might be some of the weird delta movement we saw, because that's about 12,000 contracts, about 6K each. I didn't expect it to have, I mean, it would have a larger gamma impact because closer to at the money, that's a problem. But, and actually it would have a different delta impact as well. Anyway, that's a serious alert. The support that we saw this morning, that was right here. I'll remark it because it's still kind of important, just not as important as it was. We had, as we have this open, this was support. That support is now gone. That person dipped. So if we start to go, it is increasing the likelihood that on a dip, we could potentially sell off all the way to 5750. When did this player leave? I want to find out what time this person left. Right? Yes. Okay. So they left somewhere between 9:50 and 10. That player exited somewhere between 9:50, somewhere right here, this upswing between 9:50 and 10. This was that giant put credit spread leaving the system. Interesting. So this wasn't actually even bullishness. This push to the upside was the downside support saying, nope, I'm done, dude. I'm out. Wow. That's really, really interesting. All right, let's zoom out. Did they roll it down further? Okay, so there's another put credit spread at 5745 by 5740. And then it does look like this player potentially rolled it down to 5725 because we see that's not the same size though, is it? What was the max? For some reason, this isn't working. I thought it was around 6,000, but anyway, there is a put credit spread at 5745, and then there's it's spread by 20 points. 10 points, 20 points, 10 points. 15 points? Why would they spread it by 15 points? Anyway, there's a put credit spread with the short leg, the protective leg at 5745, protective in terms of positive gamma. And then there's another one at 5735. Then there's a ton of long puts below 5715 right here. So that's quite a bit of negative gamma you could see from the red in the chart. Actually, can you guys see that? Where's my head blocking it? Can you guys see it now? Okay. Remember, red is negative gamma. Negative gamma means more trend following. It is not bullish. It is not bearish. It means if we get there, look for the trend to persist with whichever direction you were taking into it. So in this particular circumstance, if we start to push 5735, something like that, there might be a quick flush all the way down to 5700. I mean, that is just all negative gamma. That's what this red is. So we're in a little bit of positive gamma right now. If we do start to tilt, where is the market at the moment? Oh, wait, hang on. Let me fast forward to real time. All right, we're getting a little bit of a bounce, but you can see that there's still negative gamma between 5720 and 5 5695, but let's just call it 5700 flat. Interesting. What a strange day. This bounce is lasting way longer than I thought it would, which means that we have pretty easy levels to spot a breakdown at. So DJT is having a phenomenal day. We kind of hypothesized this. DJT, for those of you who don't know, that's the ticker for Trump Media and Technology Group. I don't know. Maybe there was an announcement. I highly doubt that. I think what's going on with DJT is people know in 1 week's time, on January 20th, Trump is going to be, the president-elect, Donald J. Trump, is going to be inaugurated. So I think people might just be playing this ticker as like just a shift of power of saying, hey, Trump's now in power. I don't believe there's actually a fundamental update to the company, but I mean, look at the daily here. DJT, I mean, breakout alert. Not only did we break the high on January 7th, we broke the high on December 26th. We also broke the high on December 17th. We know that there's some action at the 40s. The next stop, honestly, might be 44. And then past 44, we have 46. But clearly, a little bit of a trend line breakout right here. I mean, I would anticipate that the reason people are being bullish has to do with the inauguration. But if you can predict why people are or aren't bullish or bearish, kudos, congratulations, you get a cookie. It doesn't matter if you know why people are being bullish or bearish. It matters, are you properly reading how bullish or bearish they are or aren't? So this might be because of the inauguration, and it could deal with anything. It doesn't even really matter at all. What matters is you have technical breakouts, you're holding the EMAs, you're checking the options flow. We might as well check the options flow just because we're here talking about it. Yeah, very positive. People are buying calls for this Friday and also longer dated calls. So they were buying calls up until 10:07. They took a breather and then they started buying calls again. So there's no real bearishness here. The puts are completely flat. It's just people are aggressively buying put or calls on various different time frames. So that's what's going on. Now, why are they doing it? Okay, I think we could have a pretty safe conjecture that it has to deal with the inauguration. But once again, does it matter? Does it actually really matter? So obviously, please consider that. Wow, what a recovery we are currently seeing here. So the 5-minute on ES is holding bullish. The 5-minute on NQ is also holding bullish, but maybe we're reverting right here. What are we doing, dude? Today is not the easiest trading day. Yeah, we're right back at 5,800. I wonder if we're going to actually hold this time or if it's going to get smashed. Look at options are getting faded once again pretty hard at this level. And I do want to bring to your attention, every single time we get to 5,800, the options are lower and lower. So we first tested it early this morning, right before the change of the hour. The delta was the highest. Then we tested it again. And guess what? Even though price went higher, the delta was actually lower. And even though we haven't made a new intraday high, we're kind of right back at that battle level, pretty much the same. I do need to bring your attention. Options have not been agreeing with this move. As of now, on a very short-term basis, there is no point in being bullish. You're fighting the trend of options. I find that the best way to trade is when price and options agree on trend and you then are trading that trend. Right now, there's a bit of a mismatch that I would say slightly favors the bears just because the delta is so low. And I obviously know we're also at this key level. So maybe things revert. That's a giant if, but what you would want to see if it is going to revert to being a bullish trend is you would want to see this delta really pop, which we're just not seeing that right now. If you currently have a bullish position, I'm not here to like shit on your parade or anything, but it's just not there. I feel like you are going against trend. Once again, things can change, and this might be kind of that dead cat bounce situation we were speaking a little bit about not that long ago. But if this just keeps getting smashed, I don't know what to tell you. The Mag 7 is picking up. It's going from an intraday delta low at 1030. Pretty decent recovery. Price is almost, for once again, with respect to just the Mag 7, Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla, we're almost back up to that high in which we saw at 1007. Delta is kind of at these high levels, but I do want to remind you that we started off at 932 and it just dumped pretty hard. Also, the 5-minute and the 10-minute are now bullish, but the 30-minute is bearish. I do not like trading those mismatches. The 5-minute and the 10-minute's bullish, but the 30-minute's still bearish. I don't like trading those mismatches, especially in dangerous environments like this. I don't think that this is the time for me to be a dip buyer. If you are running a system and you're like, hey man, no, this is net profitable over the long time. I know I should be buying the long term. I know I should be buying right now. Hey, have at it. But if you're just going off of gut and feel of like, I'm just going to buy this dip because I think it might be good. If you're just randomly throwing your opinion onto the market, it's only a matter of time before you completely blow out. It really, really is. You have to have some sort of system, ideally a perfectly mechanical system behind it. And if it's not perfectly mechanical, at least as close to that as you could possibly get, especially in dangerous environments like this. So let's see. The SPY just hit a new intraday high. Once again, it's just getting to the low value that we saw. This is the low value from Friday. The Qs still have this upside gap though. One thing I want to throw out there is, yes, there are very high odds for the Qs getting up to 503.92, very high odds, and we're not that far away. But if we hit that, don't be surprised if it turns into a 1006 scenario where the SPY got up there and then people took all their profits. So I'm kind of watching to see the Qs, if they can go another additional 35 cents right here. But be careful in case we're literally just running back what happened at 1006. And why I guess I'm calling this out and why it might be dangerous is because look at the daily chart. Upon the gap getting filled here, we got this upside gap fill. That cleaned up the chart. As in, okay, there's not going to be people really playing it because the trade's over. Same thing with the Qs. We have a little bit more distance to go. What if this is just like what we saw on Friday, where it pushed a little bit to the upside to get that gap fill, and then we ended up vomiting? We've seen this type of thing recently where it's cleaning up the chart to the bullish side just to get rid of those gaps. And then the day ends up actually being pretty bearish. So just want to bring that up as a potential scenario. By no means is this a guaranteed thing, but just a scenario to consider that if we hit this value, which it looks like we're literally about to hit, if we hit this value and then options turn again, it was literally just short-term players playing for the upside gap fill, and then they take their money. And if you don't have that bullish support anymore, why are you in it? So just pay attention to that. We're almost there. Did we actually hit it? Nope. I'm going to set an alert just to know if we get the upside gap fill. Once again, the SPY already did it. I don't know if the Russell did it. The Russell also did it. So the SPY cleaned up its chart. The Russell cleaned up its chart. The last one to do it, and it got real close there. Real close there. It was less than 20 cents away. The Qs almost got it. Let's see. Obviously, I still have my swing put plays on just because I don't let like a couple minute movement decide what I'm doing with my swing plays. This comes back to the conversation we had earlier of using the appropriate time frame charts for the appropriate trade. So yes, I do the scalp trading. You saw that on futures. Yes, I do zero DTE ops trading. Actually, I haven't gotten a signal on that. So that's why Piper hasn't fired yet if you're in the Discord. And then I do have swing trading, and I attempt to use the appropriate charts for all of those. I don't want to use like a 15-second or a 1-minute chart based on a swing trade where I might be in it for 1 or 2 or 3 weeks. So there's a big importance. Big importance. DJT's trying to break 40. It's going to have a tough time breaking 40 because there's quite a bit of open interest at that level. There's a lot of long calls at 40. So if those players go from out of the money to in the money, once again, they're long calls, they might choose to monetize. And remember, if you're monetizing calls, you're taking delta out of the system or you're adding negative delta. It's mathematically the same thing. So when you're doing that, it's making it less bullish. So don't be surprised if DJT struggles at this whole dollar value, because not only is it a psychological value of 40, but there's a lot of option players based at 40. So just be careful there. Are you saying it's been a sell the rip sort of last few days? Without a doubt, but not even from what I've been saying. That's just been evident from the trend of the market. Look at this, just lower highs, lower lows. All of these bounces have been worthwhile to sell just because we've been clearly trending down, lower highs, lower lows. When you're in a downtrend, of course you want to sell the rips without a doubt. Like, what about the market from really December 18th until now has been bullish? There hasn't been a bullish thing going on ever since we got the results of that FOMC decision. And really, more than the decision, the commentary from Jerome Powell. Folks, we're not getting rate cuts anytime soon. The inflation is trending back up, which we're going to find more out about that tomorrow with the PPI report. But it's just not happening. It's not happening. All right, we're about to get the gap fill on the Qs. And now, how disgusting would it be is if they get it to exactly the cent and then the market just dumps? I'm anticipating a little bit of an overshoot. Maybe we tag, 504 at this point. I'm just throwing out random numbers. But I'm looking. We got close. We were within 3 cents. The Qs almost got it. Almost got it. Here it is. I'll make it a little bit bigger. We got real close to this upside gap fill. Dude, do you think they're going to be dirty and undershoot it? Dude, that would be so disgusting today if they undershoot it by 3 cents and dump this market. Matt is the best trader on this side of the Mississippi, undoubtedly. I prove it day in and day out. Name another live streaming trader who's even potentially on my level. Like, I don't even think there's a person live streaming their trades that's in my league, no less better than me. But here we go. I wanted to see this gap fill. Once again, we are looking at, there we go. Okay, dingity ding ding ding. Okay, so the gap got filled. Remember, those are super high odd plays. Super high odd plays. So that's something that you should have in your repertoire, especially as a day trader or a swing trader. Pay attention, especially on the indices, the upside and downside gap fills. Incredibly important to pay attention to. And why they're so important is just because so many other people know about them that they quickly become self-fulfilling prophecies, and they just have really high odds. Obviously, it's never a guarantee. You can't be betting the entire house on that. But with proper bet sizing, maybe like a half or a fourth size Kelly criterion, that's something you could do time and time and time again. Did you see a rumor that Cali fires could cause a nuclear explosion as if nears weapon storage facilities? Nope, and I don't buy it at all. I think that's just some doomsday BS. Matt, why aren't you also the best trader on that side of the Mississippi? Legally, I'm not allowed on that side of the Mississippi. It's just a complete misunderstanding, you know? If you ask me, it's just them trying to keep a good man down. What is this? Is there anything else that I'm missing right now? Looks like Take Profit Trader and Vanquish Trader. Vanquish Trader is the options profit count, and Take Profit Trader is another futures one. They both have big announcements this morning of certain, it looks like Vanquish Trader 10% off and free credit reset. And then Take Profit Trader looks like they're getting rid of their daily drawdown rule. So 2 different updates there, one for futures prop and one for options prop. So just want to let you guys know about that. Dude, if we fade here, if this is the high of the day at the upside gap fill on the Qs, that is reading this market better than I could read Dr. Seuss, honestly. If this is the high of the day, what an absolute god tier call out we have going. Options are not fading that hard yet. The Mag 7 is going flat. And then if you look at, dude, this might be the high of the day. Dude, they're fucking flushing it already, dude. Oh, dude, if the Delta keeps dropping here, that is dirty. Absolute dirtiness. Dude, this might be the high of the day. This might be a classic clean up the chart, get the gap fill, and then continue with the overall trend. Once you see it, it gets burned into your memory, and then you start to notice it all of the time. They cleaned up the chart by getting the gap fill, and then they continue with the overall trend of bearishness. That is brutal. To know if this sell-off is going to keep going, you just have to watch options right here. We started to sell off. If they keep selling, what are we doing? They're buying puts right here. No one's been touching calls. They started to repurchase puts at 1047. Right here, 0 DTE puts, longer duration puts. The put buyers entered the system once again at 1047. And if you look at the Mag 7, to be fair, it is holding on a bit better. There was a lot of call buying all the way up to 1050. And then at 1050, the call buying stopped. There was no call selling. It just stopped. But put purchasing did start. Dude, are they going to fucking drop it on them? DJT got about, well, it's above 40. That's impressive. Tesla's screwing me. Coin's kind of screwing me. Rum is nice and green. DJT is beautifully green. I'm curious, how many of you are actively playing DJT right now, whether with equity or with options? How many of you, raise your hand, and I don't even care if you're bullish or bearish. I'm just curious, how many of you are actually playing DJT, whether in investment or short term, just like one way or another, whether bullish or bearish, equity or options or whatever. How many of you are currently playing DJT? Obviously, the ticker that represents the company that Trump, the president-elect, is actively involved with, large equity owner. When you say they are going to drop it on them, who is they? The market in aggregate. Remember, the market is a giant voting mechanism. So it's just, if there's more votes to be bearish, it drops it on the bulls. So I guess, are they going to drop it on them? I would say the bear camp, people who have currently a bearish viewpoint. I got exposed via PHUN instead. I don't think PHUN has anything to do with DJT. I don't know where you're getting that, Chris. Unless I'm like maybe missing a major update. What does PHUN have anything to do with DJT? Calls on Rum to ride with DAG expiration next week. Okay, so you're playing the whole inauguration thing. Interesting. Reminder, this is an OPEX week. January leaps are expiring on Friday. Yes. Not only is this an OPEX week, it's actually an abnormally large OPEX week. There's a ton of open interest in the system right now, quite a bit of which is, actually, I know I could tell you how much is going to expire between now and, let me check it out. For this week, 62% of the gamma is coming off the table on the 17th. Yeah. Like Friday's the big one. I'm trying to quickly compare it to other quarterly ones and I can't find it. But for this particular week, 20% of the gamma comes off the table today just because it's 0 DT, but then relative to Tuesday, Wednesday, Thursday, 62% of it is actually this Friday, which is a huge OPEX day heading into the inauguration. Also clearly heading into a little bit of a holiday weekend. As a quick reminder to all of you, the market is closed a week from now in observation of actually not the inauguration, but Martin Luther King Jr. Day. So on Monday, January 20th, a week from today, the market is closed. So if you're playing options and especially shorter term ones, you might want to consider the fact that you have like one less trading day than maybe you are anticipating. Aaron, DJT call the 17th. Why are you playing it for the 17th? The inauguration's on Monday, the 20th. Wouldn't you want it to capture? I feel like you played it too early. If you're playing it for the inauguration, that's Friday, and it's on. I think you're early, dude. Feels like you're a wee bit early on that one. DJT is by far the biggest gainer. I also want to bring your attention to the VIX, which earlier today the VIX was higher. It was almost pushing 21. Got smacked down pretty good. We're getting a bit of a bounce right now. I guess I'm paying attention at the full dollar values. Does it take out 21? Does it take out 22? Does it take out 23, 24? 22 and 24 over recent history seem to be pretty important levels. If we're taking those levels out, there's a good chance that the SPY is at a new intraday low. Sell the news happens every time. Well, not every time. That's dramatic. You can't speak in such absolutes when it comes to the market. But once again, that's not even the news. The news would be on the 20th. So you would want it for the next week so you could sell when the market opens on Tuesday, even if you were attempting to do that. You wouldn't do it before the news, like you're saying it yourself. Sell the news. The saying isn't sell before the news. It's sell the news. Dude, I think I might have just pulled off my best call out of the year of the market getting faded right at this upside gap fill. If this ends up being the intraday high, I don't know what to tell you guys. Very, very quickly. So many of you know that over the weekend, I lost my channel because of a hacker that I ended up getting it back, and it was relatively easy. But my producer and I were talking about it, and I want to clarify. If you're on Rumble, this does not impact you. Rumble, my account was completely good. All the content I ever make is going to go up on the Rumble channel. Now, since we're once again having renewed issues with YouTube, I made a new YouTube channel that is going to serve as a safety net. But in the meantime, I'm putting evergreen content on it. So if you're watching on YouTube right now, you're watching on the Matt Kors Show. That's going to be for the daily show and daily updates. So basically 2 pieces of content every single day, Monday to Friday, a 2-hour show from 9 to 11 in the morning. And then after the market closes, you're going to get wrap-ups for what happened that day and what to look forward to the next week. So once again, on the Matt Kors Show, you're getting daily news, daily updates. This new channel, not only is it a safety net, but it's where I'm going to put more of evergreen content. So not really daily updates, but just stories about trading, educational things, maybe some interviews, things that don't really matter so much with like, oh, you got to watch it today. So there's now 2 channels. They're both run by me. This one, the Matt Kors Show, is daily shows, daily updates. The Matthew Kors, this one is going to be for you if you're interested in evergreen trading and finance and education and trading strategy, stuff that you don't have to watch it immediately. That's why it's called evergreen. So the channel, we literally just made it. There's 1 video up. There's 143 subscribers. If you're a person who's interested in evergreen content, here it is. I'm putting it in chat right now. Once again, if you're on Rumble, this doesn't impact you. All these videos are also going up on Rumble. This is more for the YouTube community, just because it seems as if I need a safety net, because if I lose one, then I'm going to need the other one to be able to talk to YouTube. So like the way YouTube does creator support is the dumbest thing ever. Basically, if you lose your channel, you can't talk to support because you lost your channel, and it's via your channel that you talk to them. So I'm basically in this situation where it seems smart to have a safety net as we're here trading, always talking about downside risk. This seems like a good way to protect that. But honestly, my producer and I are very, very exciting about making a whole new form of content that, once again, is not the daily show. It is not daily updates. It is evergreen content that's going to be viable to watch. Now, it's kind of going to be like the early Matt Stratz days, where I was teaching about things that were applicable at any point, not necessarily watching it then. So if you're interested in that, and I know this isn't for everyone, I know some people just like the show, I know some people only want the daily updates, but if you are interested in the evergreen content, I just put the link it's in the description. I just put it in chat. So just want to throw that out there and let you know what's going on. But at Matthew Kors and at the Matt Kors Show, those are both actually me. So I just wanted to call that out and let you know that we have 1 video up, and that is in fact truly me. So just want to let you guys know there. Wanted to let you know, and are we coming back down a little bit? All right. At this point in the day, it's pretty easy to tell that I just need to be setting up the intraday highs. The intraday highs. And you know what else is really easy on days like today? You know you're in big trouble when you snap these trend lines. So this, if you're a day trader, scalp trader, whatever you are, if you're trading on a very small time frame, I would very much argue this is what you should watch today. The intraday high, the intraday low, and also this upsloping trend line that is very evident on the 3-minute chart. You could probably find it on the 5-minute chart as well. So obviously, if you snap that, then you're looking for the test of the intraday low. If you hold it, you're looking for a retest of the intraday high. Pretty easy peasy lemon squeezies. I'd be watching the volatility as well. Once again, things get iffy if we take out 21. They get a bit crazy if we take out 22, and they're going to be like real crazy if we take out 24. So I'd be watching the VIX, kind of watching the small cap sector right here, similar to the intraday high low. You have the exact same situation on the small cap. Watch for this trend line to either bounce or break. I don't know how it's going to react to these trend lines. I think there's a good chance of them being tested, but whether the bull stepping in there or if the bears break it, I don't know. That your guess is as good as mine. Right now, the 5-minute and the 10-minute are still bullish. The 30-minute is bearish. 5-minute and 10-minute are still technically bullish, even though the NQ might be testing here. 30 minutes still bearish. So there's mixed price action news between the shortest time frames and the medium time frame. So another worthwhile thing, obviously, to be paying attention to. The SPY is a bit more bullish than the tech sector. So obviously, you should be paying attention to that. With respect to options flow, we're kind of flat right now. Not the most is going on. Looks like the delta had a huge pop from 1030 to 1050. Then we came down, tried to get some recovery, and now it's just getting smashed again in real time. It's getting smashed again in real time. That was for the Mag 7 to be. If I forget to tell you what I'm looking at, just look right above my head in the top right, and you can see what we're actively like doing an analysis of. And then with respect to the S&P 500, we had a decent pop from 1035 up to 1047. It was looking a little bit squirrely. Then we sold off, and now, I don't know, one of my favorite sayings, I guess we're violently going nowhere. Swing to the upside, downside, upside, downside, upside, downside. So the trend's clearly down. This trend was down, huge pop, down again. So that one's a tough one to trade. I'm not in love with any of these setups. I wouldn't mind betting against the Russell, being bearish on the Russell on a break of this, but things will get more dramatic if the SPY snaps this trend line, if the Q snap this trend line. As I said, I kind of called this out beforehand. I called it while it was happening. I said it to you, rewind the stream. 1048, that push of the upside gap fill could very well be the high of the day, and most likely right now will serve the high of the day, especially if these trend lines snap. Remember, this is always a gauge of probability. It's never 0 or 100. It's just what's more likely, what's less likely. Right now, it's all right odds, not the most impressive odds, that 1048 is the high of the day. If we snap the trend line, those odds go up. If we snap the intraday low, they dramatically jump. So remember, this is you got to think about this in a probabilistic manner, never a guaranteed manner. So I'll set an alert. I recommend that you guys do it too, just to know kind of if the trend is potentially inverting. Where is this SPX? I'm just trying to get this all cleaned up. We cannot hold 5,800. If anything, this overshoot of it was really just to help the NASDAQ get that upside gap fill. And now we're quickly getting smacked below this. I laid this level out early this morning before the market even opened, as if we get above it, might be setting up a dead cat bounce. Honestly, I thought the dead cat bounce might last a day or two. I didn't expect it to last 12 minutes, but I suppose it is what it is. All right, I'm going to set this back up there so I know if we take out 5,800 again. And then obviously this is just an intraday breakdown at this level. Apex Tradeovate connection restored. Oh, that's cool. I'm not on Tradeovate. I'm on the other one. Matthew spelled right. This one here. I mean, the link to this is in the description of the video, and I'll put it in chat right now if you just want to directly follow that. But it's in the description of the video. But it's MATTHEW. It's at Matthew Kors, and then this one's the Matt Kors Show. Those are both me. So I just want to let you know this is more evergreen content, while this will be the daily show and daily updates. We're trying to consolidate so you know each channel what you're getting. No confusion between what are the shorts about? What are the VODs about? What's the live about? Why is there a switch up? It's going to be very well defined. The live show is the live show. Active trading from 9 to 11, all the hot news. The daily update is exactly that. All the news from the day and what to look forward to the next day until the next live show. While this channel is going to be evergreen content, just viable finance trading, trading journal, trading psychology, AI trading, just evergreen videos that are viable to watch at any point in time. So just wanted to explain it. Now, I guess I'm not really asking you to subscribe because I know this type of content's not for everyone. If this type of content is for you, I just wanted to give you the link. Like I said, it's in the description of the video. I just put it in chat, so it's just there. And it looks like we are making a run to these down-sloping trend lines. This small cap sector, the Russell just bounced off of it. Higher low. Let's see if this actually manages to hold. And while we're here, we might as well look at the options flow. The Russell flow is always a little bit more jagged and messed up than you want it to be. It's not like a nice flowing thing, but anyway, kind of sloping down. I would say the generic regression of this is to the downside. Mag 7, not looking so good. Bounced, had a lethargic bounce, looking pretty weak to me. But we just got a flow alert on the SPY, and then all of a sudden the Delta did start picking up. So right now in real time, we're getting some bullish flow. What is it? Puts being closed once again and calls being bought. So this is the double doozy. We're removing negative Delta and we're adding positive Delta once again in the short time frame. But I'm surprised that so many put players are being this much of pansies today. I'm really surprised that anyone's closing out puts. I just thought there would be like more aggression. If anything, I thought people would be aggressively buying puts today of like the whole, like, we're gonna go down. But I guess not. I don't know. Thoughts on CEG? My first thought is what in the fuck is CEG? An energy play that's down 7. Oh, an electric utilities play. No thoughts. I think there's better opportunity in the market. I give borderline 0 fucks about this company. I don't know anything about it. The first thing that jumps out to me is this downside gap fill at 256. And maybe if it bounces off of that, you could get a low risk entry. But if I had to play it right now, I'd probably be more interested in playing this gap fill. But it is generically bullish, so I kind of don't want to bet against it, which makes me feel like my major thought on this is just to not play it at all. What are my thoughts on Sana? Looks like absolute. It's a biotech company. All these biotech companies suck donkey dick, dude. Gap up, that gets faded. As soon as you look at biotech plays, you're going to see this a million times. The biotech is the major play is to not play it at all. And then if you really, for some degenerate reason, need to play it, be bearish because they so commonly gap up and get smashed. Going long biotech, you're taking on an incredible amount of risk. This one is lower highs, lower lows. It's a dog shit company that's probably going to run out of funding. They're probably going to fail one of the tests. They're probably never going to get FDA approval. And how can I say that? Because it's such a small percentage of biotech companies that become what they actually say they want to do. It's a very small percentage. Like I'm talking sub 5%. So when you do it, do the thing that favors you 95% of the time. Like, I don't know, like, first of all, I hate this industry. Biotech, pharmaceuticals, medical supplies. The industry as a whole sucks ass because you're betting on FDA approval, denial, how this test goes, how that test goes, blah, 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 blah. It has nothing to do with like price action. It has to do with random updates that are outside of your control. Like, it's just, unless you have an intimate knowledge of like a company or like biology in general, like, no, this drug has a better chance. Like, unless you have that knowledge, you should stay away from this industry. Now, I know some people watching maybe do have that knowledge and have at it. Take advantage of what you know. Obviously, you should be trading what you know because you can discern things that maybe the general public doesn't. I am not a person with medical background. I'm not a person with a biotech background. I am not a person with a biology background. And you probably aren't either. If you are, dude, have at it. But this whole subsector is truly worthless for you to trade. RGTI is down. Yeah, no shit. Another shit company. this entire thing was so obviously just a FOMO run up getting smashed. I think their yearly revenue was $11 million. I don't know why anyone thought this was going to look at all these losses. Net income down 22 million, down 13 million, down 21 million, down 12 million, down 14. This company is running at a massive, like it literally makes a 10 to 15 million a year. All it is burning money. Burning money. But guess what? Retail traders got excited because they saw, wow, that's green. I got to chase it to the upside. No, there was nothing supportive of this. It was a great active trade. So if you actively traded it to the upside and to the downside, congrats. But as an investment, it was stupid because fundamentally this company is failing. It's just burning money. It's just burning money. It only takes 4 seconds of research to realize this was not an investment. Once again, investing and trading are two different things. If you bought this like hype breakout here and you're like, no, I'm going to ride it. And then maybe on some weakness in here, maybe like when it snapped this low, maybe right here you got out. Okay, cool. That's an active trade. You rode the trend. Maybe you're riding it back to the downside. I wish you the best of luck. Awesome. That's trading. But as an investment, what the fuck? Reminds me of AMC. Yeah, you're right. AMC was never an investment. I preached that from the mountaintop and no one wanted to listen to me. Like, but it is. I'm here for the short squeeze. Inherently, if you were there for the short squeeze, you didn't care about being an investor. You are 100% right. 100% correct. AMC never was and never will be an investment. It was an active trade. You're saying exactly the right thing. Nice swing to the upside. Nice swing to the downside. You can take one of those. You can double dip. You can make a lot of money. That's what being an active trader is all about. But just to be like, nope, I'm in it because I see one green day and now I'm a fundamental investor. What the fuck are you smoking? And I'm saying you as in like the editorial you, because there's like a ton of people that were like, no, I got to invest. Like, it's like you're not an investor because it went up for 1 week. That doesn't make a good investment. It might make it an interesting trade if you can get in for minimal risk. And this was a great trade to the upside. It was a great trade to the downside. But to ever put lipstick on this pig and call it an investment, well, you're just being greedy. Like it just, that wasn't how it ever went. And there was no data ever suggesting it was a quality investment. And then obviously things got really bad when Jensen from Nvidia just completely torpedoed it. Still waiting on that squeeze, Ooga Booga? No, AMC already squeezed. June of 22. It went up 96% in one day after already going up a lot. I mean, the thing went from $5 to like $72. That's a squeeze. I'm holding AMC as memorabilia. No, you're holding AMC because you're a bag holder. And I'm not hating on you. AMC cost me a lot of money. AMC, like, I am not preaching from a position as, hey, I executed it well. Why did you not do what I did? I lost 600 to 700 grand on AMC. Lost it. Negative. Gone. So when I say, like, I'm telling you as a person who was seriously burned by it and saying, learn from my mistake. Obviously, there's no real way you could brag about a $700,000 loss. So I'm by no means saying like, hey, like I crushed it. This is why you listen to me. I'm saying I got absolutely torched. Please learn from my misstep. Please learn from the trap that I fell into. This idea of like the tribal cult-like trading and investing and following just the dogma, it can work if you're also taking in real news and having a real breakdown. And that's where AMC turned. AMC had that community investment, which is great because like I think right now the value of a company is fundamental value plus community value. So it had a lot of community value. I think that was a good read. I think where AMC started to break apart was when people at first were taking in real legitimate news of mathematically and from a supply demand situation of why there could be a squeeze. And then it fell apart when they started to just make up information, and any information that went against them, they were just no longer being honest. They were a bunch of fucking liars. Trey was lying all of the time. He was horrifically lying. And I guess I shouldn't be naming names, but just in general, a lot of the furus and gurus who were talking then, who never said a negative thing, and even to this day are still trying to tell you that AMC is good, they're not they're not functioning in reality. They are not interpreting data in a non-biased fashion. They are any information that goes against them, they're just disregarding, they're calling it bullshit, they're saying it's from shills, they're just making up things. And then anything that, well, there's really no good news that relates to AMC, but any news that could be contorted in a way that's positive, they just like run with that for a million miles. So like, it's just extremely, extremely one-sided. And you know it's one-sided, and I could show you why it's one-sided. Because when everyone's telling you it's bullish and phenomenal, and then this is the look of the chart, who do you think's right? That's one of the beautiful things about the stock market, is at the end of the day, we have a scoreboard. There's the scoreboard. So yes, there was a squeeze right there. I could tell you when the squeeze died and no longer had a shot right there. That was the squeeze. It had a bounce shot, did not really take, had another bounce, but you didn't really know, broke down, game over. It was game over at the end of 21. Done. That's it. The trade's over. Well, no, actually, the bullish trade's over. Yeah, you had an opportunity to be bearish, another opportunity to be bearish, another opportunity, another, tons of opportunities to be bearish, and they all would have obviously paid. But it's an active trade. And there's a huge, mega difference between a great active trade and an investment. AMC never was and never will be an investment. It's stuck in a debt spiral, and it's not going to, you know what's going to happen with AMC? If you give it enough time, it's going to be owned by the bondholders. It's going to end up one of these days declaring bankruptcy. Market, cut this clip. Given enough time, the story of AMC ends with AMC declaring bankruptcy, and it's going to go to all the debt holders. That's what happens. Close to a game over chart on MSTR. Let's take a look at it. I don't know. Not really. There's just a downside gap fill at 279. And then you have a lot of like just key support levels. It's not looking good. Lower highs and lower lows ever since this blow off top in November. It's probably trading at too high of a multiple relative to how much Bitcoin it has. I think it's trading at like a 2.5x to 3x multiple. At that point, if you like it, if you like Bitcoin, just go buy Bitcoin. Why would you overpay on Bitcoin, something trading at a 3x multiple to the amount of Bitcoin it has? So if you like MSTR, you should like MSTR for MSTR, not because of Bitcoin. If you like Bitcoin, go get Bitcoin. If you like trading Bitcoin leverage, go trade Bitcoin leverage. There's no reason to really be in and out of MSTR because of Bitcoin. If you want to be in and out of MSTR, I mean, I don't even like it as an investment. If you're going to invest, just go buy Bitcoin. I like it as a trade because it has nice range. So obviously there's big upswings, there's big downswings. If you're on the right side of a trend for MSTR, there's a lot of opportunities in both ways. But in terms of like, I guess the core question of like a game over situation, no. I mean, if this chart's proven anything, there's not really a game over. It has huge upswings, did nothing. When was that? March of 24, September, it picked back up and ripped again. So I'm not discounting anything. I would just say just be a trend follower. If it's trending up and you want to be bullish, have at it. If it's trending down and you want to be bearish, have at it. But to invest in MSCR just because you like Bitcoin, go invest in Bitcoin, because you're taking out a lot of the risk that might be specific to MSCR that's not there to Bitcoin. So like, if anything, there's more investment risk in MSTR than there is Bitcoin, because in MSTR, you have the investment risk of Bitcoin and the investment risk of MSTR. So it's two different bottles of risk that you have to consider. Well, if you're just in Bitcoin, that's just Bitcoin. You don't have to like consider other things. And right now, I mean, Bitcoin shoulder, head, shoulder, that's a clear bearish setup, and I'd be watching the support at 85,000. I talked about this in the Discord this morning. If you do the measured move from the neckline to the head, that actually brings us down to about 73. So if you're playing this like a directional player on Bitcoin, or if you're just wondering where maybe a potential bottom is, there is a measured move to the downside at 73,000 on Bitcoin. So just kind of want to call that one out to y'all. How's the market looking? Okay. The Russell snapped the trend line, retesting, not surprising there, while the SPY and the Qs are slowly but surely creeping back down. Where am I at? Okay, I'm up 14.5. Not bad. Remember, all of my trades you can get in real time by joining the Discord, macquars.locals.com. So the new YouTube channel, the Discord, the locals community, signing up for public. Remember the sponsor of today's show, all this stuff. It's just in the description of the video. If you're ever having a tough time finding something that I'm using or talking about, like Spot Gamma or TradingView, any of this stuff, just check out the description of the video. There's like a high odds chance that it's all right in there. What am I thinking about Oxy? I'm actually liking it. I'm actually very much liking Oxy, and it is because of Oxy and Warren Buffett, but I'm liking it because oil's picking up. So if you're of the mindset that oil is going to just keep going, or if you are of the mindset that inflation is going to keep going up, that's going to benefit oil and that's going to benefit gold. Remember, commodities go up in inflationary periods. So, I mean, we're already kind of seeing that in oil. So if you think oil is going to go higher, there's a good shot that actually benefits the entire energy sector, XLE. Now, Oxy's an interesting one just because Warren Buffett's in it, but you could also look at ones like Exxon, which actually isn't doing much. Chevron, that one's actually picking up a bit more. At the moment, I do not own any Oxy, but I am thinking about getting into it and dropping my bond position and picking up some energy plays. So, I kind of like it. The more things progress, I do unfortunately believe inflation's going to get worse. So if I truly believe in that if I truly believe that is right, that inflation's going up, it would make sense to get exposure to more commodities. So I'm thinking about switching my TLT position over to a split between Oxy and Devon. I haven't done it. I want to be very clear, but I am kind of eyeing those two up. And I think they actually have decent dividend payments as well. Does Oxy have a dividend? I know Devon Energy does. It actually has a very interesting one of how they actually both do. So a little bit of a bonus on top. I don't know, just something to consider. Thoughts on the financial sector earnings this week? Do you think they will do well given the higher interest rates? There's no point in guessing like that. I find so many people in the retail space are trying to predict. Stop predicting those types of short-term moves. If you want to predict what we were just talking about, I think inflation is going to be worse at the end of this year than it is now, that's something that you can kind of do a longer-term swing trade or even investment off of, which is why I was talking about switching my bond investment over to commodities. But in terms of predicting that stuff, remember, the shorter the time frame, the more difficult it is to predict. So this idea of trying to predict will earnings beat or not in the financial sector, go flip a coin. Your odds are going to be the same. There's no point in attempting to predict it. I've not found any retail trader who can time over time in a large data set confidently predict earnings. It's basically flipping a coin. So with those odds, unless you have some robust models that have gone through variance testing, Monte Carlo simulations, there's so much you would have to do. If you don't feel like doing that, why don't you just wait till the earnings are out and then play it accordingly from there? There's a phenomena known as earnings drift that basically if the earnings reaction is positive or negative, generally you gap that way, consolidate, and then continue that way. Just wait for it to come out. You don't have to predict shit. You could just wait. So this idea of attempting to get in before, it's fun. It's degenerate. I don't think it's smart for the longevity of your trading account. If you want to play earnings, and don't want to make a robust model that predicts earnings for you to give you some sort of statistical edge, the best thing you could probably do is sell premium. Maybe you come up with a thesis of a beat or a miss, and then you sell premium, obviously in favor of that position. That's one way that I could see do it, just basic, because we know there's a statistical edge to playing volatility crush. So that's something that's measurable and anyone could easily do. But to be long premium or long or short equity going into an earnings, it's just stupid. Absolutely stupid. Do you believe TLT has lower to go? I've been watching it for a while. I don't know how many times I can still tell you guys not to predict, and then I get questions like this. Folks, I will fucking shake you like a baby until you understand. Stop trying to fucking predict. No one fucking knows. These questions, and I don't want to come down on anyone individually, because I was like this for many years of my own trading career. And then one day, there was actually a book that like changed my framework on what trading is. Stop with these fucking questions. And I'm going to have to say this a million times every single stream. Do not predict. Your entire job is to say, do I currently have good risk to reward? Yes or no? 95% of the time, the answer is going to be no. Once in a while, that 5% of the time, you're going to have a good risk reward setup, and then you take it, and the die are in the air, and you just let it hit. Either it hits your risk or it hits your reward, and that's it. And then you move on with your life. But this idea of like, well, do you think it could go up, or do you think it could go down? Literally 100% of the answer to that is, I don't fucking know. Who knows, dude? Who knows? Like that's. It's so, your job is to react. You react to breakouts, you react to breakdowns, you react to fake out breakouts, you react to fake out breakdowns, you react to expansions of volatility, you react to contractions of volatility. Your job is to react. You react to all the new incoming data and make sure you still like your position, if you have one, accordingly. And that's all you do. You just say, okay, do I still like this? Yes or no? You don't just say, oh, like I think we're going exactly here, or I think we, like, this idea of predicting, you're never going to be profitable off of it. You're going to be right about 50% of the time. You're going to be wrong 50% of the time. But in the long term, your account will not be trending in the direction you want it to. It's just not going to be doing it. And this is from a person who, like, I've been doing this for over a decade, and I wasted many years trying to predict things, predicting turn points, predicting an earnings beat or miss, predicting a political announcement. Predicting is not how you make money in trading. Predicting is how you make money in investing. Someone like Warren Buffett, he's always predicting that, but predictions become net profitable the longer your time frame. So you're talking about investing. As a trader, if you're in it for a scalp, an intraday trade, if you're in it for even a swing trade, you're not predicting. Do not predict. It's a waste of your fucking time. It's a waste of your time. It's a waste of my time. It's a waste of everyone else in the community's time. Predicting is a fucking waste of time. I'd argue that you're reacting right now. Yeah. Reacting to the, and like, unfortunately, like, I guess I don't mean it personally at all, because like I said, I did this for years and years and years. And for whatever reason, when people start trading, we think that there's like some magical way that like certain people have figured out this puzzle and then they could predict accurately. And we're all trying to replicate that when no one can. The secret to the market is that no one has the crystal ball. Tom Lee predicts a lot. Yeah. And he's, guess what? Right a lot, and he's wrong a lot. Folks, the best traders in the world, and I'm not talking about investors, I'm saying the best traders in the world are right about 50% of the time, plus or minus 10%. So somewhere between 60 and 40% are the best traders in the world. The best. Like, literally the legends of Wall Street. It is very, very difficult to find someone who's right more than 60% of the time. The singular best trader of all time, Jim Simons, running Renaissance Technologies, he was right 50.75% of the time. Think about what I'm telling you. The best trader in the entire world, making over $100 billion worth of profits from active trading. He was in the trade from anywhere from 2 days to 2 weeks. He was more of like a short-term swing trader. He was only right slightly better than flipping a coin. He was right 50.75% of the time, and he made $100 billion in profit. So what could you do with that information? What can you do with like now knowing that? It means that, yeah, you maybe are right when you're like saying I'm bullish. Maybe you're wrong when you're saying you're, like, it doesn't matter. What matters is clearly when you're in it, the risk to reward management. The fact that the best trader ever has made $100 billion and they were right just below 51% of the time tells you that the success to trading has a lot more to do with your risk and reward management than it actually does with like, oh, predicting if I'm right or wrong, of like, oh, is this bullish or is this bearish? That is not how you make money. The money comes from trade management, as in that risk to reward management. That's far, 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 far more important than just like, oh, I'm bullish or bearish on this. And Pelosi's actually, it's still in the realm of 50%. I know obviously that's like a whole meme that Pelosi's always right and Jim Cramer's always wrong. But if you look at their actual trades and their actual callouts, it's about 50-50, depending on the time period you're looking at. Once again, most traders are between, it's 50% plus or minus 10%, somewhere in the realm of 40 to 60. You have to be uniquely unlucky to go below 40%, and you have to be uniquely very lucky to go above 60. I'm right 54% of the time. Follow me on my Discord. Chad, no one gives a fuck about your Discord. No one. It's and that's what I'm saying is trading. I was trying to think about like how we all fall into this. And I think we envision the markets to work in a world where like it is predictable. Like we all imagine that there is some sort of nice model that if you apply it, you're just making endless money and it's money, 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 money. When it's not. That's what's possible with a system, but never an individual trade. I think as a retail trader especially, we're focused on too granular of a level. I think we think about it per trade and per day. Like we want every trade to be green. We want every day to be green. When in reality, I think it's like a next level out where you have to think, is my system profitable? Your system's going to have winning trades. Your system's going to have losing trades. But when putting like all of it together, you want to be net positive, and then you just want to like, as Jim Simons would say, you have to slavishly follow that system. You can easily have a profitable system, and the reason why that is easy and yet most retail traders fail is because they don't have a system. First of all, they're trading from their gut, and first of all, already starting off wrong. Second of all, if they do have a system, betting too much, and I'm definitely a victim to that. Even I'm trading multiple systems in real time, and I still trade way too big just for the system to survive in the long term. So there's just like the way trading is thought of and the way trading is taught to retail traders is 100% wrong. It has nothing to do with predicting, it has everything to do with reacting. And I guess if in that sense, if you're like, well, hang on, I don't even see the difference between those two things, you should probably trade with a paper account and just like not be putting real money into this particular game before you have like a little bit of a more refined understanding of what this is and what it isn't. Anyway, SPY and Qs, well, the Qs bounced a little bit early at 501. The SPY is bouncing right at this trend line, and the Russell's attempting to. So right now, once again, we're not predicting shit. I'm not predicting a bounce. I'm not predicting a breakdown. I'm not predicting a bounce or a breakdown on any of these. All I'm saying is, oh, okay, that's a key level. I wonder if the bulls are going to step in, if the bears are going to leave, vice versa. All I can do is react to the real-time incoming information. Do I still like my position, or do I want to add to it? Do I want to get out? That's all you could do. Obviously, the best metaphor in this entire game is poker, because like you get your cards, then there's the flop, the turn, the river. You're just always reacting to not only the new information, but the other players' bets. And you do what you think is according with all that incomplete information. That's what's so incredibly difficult about something like trading. And this is why poker's honestly the most similar thing you could possibly do, because they're incomplete games. There's a lot of information you don't know. And I guess a counterexample would be something like chess. Like obviously chess is incredibly complicated, but it's a complete game. You know all the information. While things like poker and trading, there's new information about to enter the system that you have to consider. So by that definition, trading and poker are true games, while something like chess isn't, because that gets into the world of like what game theory is and isn't. So I don't want to bore you with that. But chess would be referred to as a complete game. You know all the information. While something like trading and poker, that's incomplete information. Something like blackjack, it's incomplete. You don't know the next thing. So I think that is important for everyone to kind of take going forward. And on that particular note, I did not realize what freaking time it is. My apologies. We went way over today, so I hope you enjoyed it. I still think when I called out that high at 1048, I still think that's going to be the high of the day. I really, really do. So we'll see if I'm right at the end of the day, as I'm just literally sitting here ranting and raving about how you shouldn't be predicting. That was a prediction that I think I used a little bit of info to like be better than 50-50. But once again, your odds are never going to be that much better. Anyway, that's what I have for you. I hope to see you in the Discord, but most importantly, don't forget about the new YouTube channel, and don't forget to sign up for Public. It is the best place to be trading options. If you don't believe me, test it out. You're really going to like it. Love you all. Thanks for the good vibes. I'll catch you later. I hope you crush the market, and I'll see you again tomorrow. Have a good one. Peace.